The entire Middle East and the infrastructure of it has the potential now to change because of Syria and Lebanon, and it hasn't even been 6 months.
Sure.
It hasn't even been 6 months, so it's a great testament to your leadership in this.
Well, thank you very much, and you've done a fantastic job. Could I just ask Linda, she's involved in so much, she's so talented and so good, and she's working on a couple of little things like Harvard, who was given $5.5 billion over a short period of time. We caught him on that one. That's crazy. But you're working on so much. You want to bring education back to the States. How are you doing?
Well, absolutely. And thank you for the opportunity. I think on the big, beautiful bill, what we saw, with school choice, that's finally on a national basis at the state level. But there are opportunities now for scholarships, more and more of them for kids who are in family schools. This is going to be a big turnaround. I think one of the biggest accomplishments we had over the past week was the University of Pennsylvania with the Title IX ruling that Leah Thomas was stripped of her title. Riley Gaines and Paula Scanlon and other women who have stood, so strong against men and women's sports. And when you put out the executive order, that just solidified and gave them the opportunity. So those are a couple of really, really big wins, and thank you for that opportunity.
And how are you doing with Columbia and Harvard?
We're negotiating hard. I think we're getting close to having that happen. It's not wrapped up as fast as I wanted to, but we're getting there.
Okay, good. And you've done a fantastic job. Thank you very much.
You've been a good team.
Yep. You have a great team.
Around this table, a lot of people would help with that.
That's right. Thank you very much. Maybe just in closing, we spent a lot of time, effort, very little money on this room. This is called the Cabinet Room. It's been here for a long time, and it had some pictures that were not many of them and not very good ones. And I actually spent time in the vaults. The vaults are where we have a lot of great pictures and artwork, and I picked it all myself. I'm very proud of it. That's Andrew Jackson, great Andrew Jackson. That's a gentleman named, and we call him President Polk. He was sort of a real estate guy. He was, people don't realize he was he was a one-termer, but he was a very good president. But, and I'm not sure I should be doing this, he actually gave us the state of California. He was the one. He was the one. So I'm not sure. Maybe he won't be there for long. But if you notice, the frame is the exact same size, almost, as the other one is Andrew Jackson. So that was a part of the reason, too, I have to be honest. But Polk was actually a very good president who's got the same frame that I needed, okay? And up here you have the original George Washington right behind the light. And then you have Dwight Eisenhower, who was a very underrated president, built the interstate system, and he was the toughest president, I guess, until we came along, but I don't mind giving up.
President Trump live now, moving on to the artwork on the walls in an extended cabinet meeting that has lasted in excess of an hour and a half with live coverage here on Bloomberg TV and radio. I'm Joe Matthew in Washington alongside Kaylee Lyons. This is Balance of Power. I wanted to have ears on not only the president, but a series of cabinet officials here with a lot of news. Kaylee, dozens of headlines on the terminal over the past 90 minutes, reiterating, by the way, he will visit Texas and survey the flood site on Friday. But much to be said about trade, beginning, Kaylee, with a 50% tariff on copper. This is the one headline that went red during that extended conversation. 50%. We're watching copper prices move. Freeport-McMoRan on the move as well. This is one we didn't see coming today.
No, we knew it could come at some point as an investigation had been launched looking into copper specifically, but it is news to us that this will be imposed effective today. He also warned of more sectoral tariffs that could come, including things we've heard a lot about, pharmaceuticals, chips, for example. He threatened a 200% tariff on pharma, but suggested that could be more than a year out. And of course, he reiterated that August 1st is the new deadline. After signing an order yesterday to officially move the date from tomorrow, July 9th, to August 1st, he suggested it's not a change, it's a clarification. And he also said the trade letters he's been sending out are equivalent to a deal. He said a letter
is a deal. He said it's always been August 1st, which is curious because we had been counting down to a July 9th deadline. We're not even there yet. But indeed, it is official. August 1, we'll stick with that. A lot of deals going out soon, he said. Countries giving us total access now. It's too time-consuming to make deals, he said. Therefore, the letters that are in the mail.
Yeah, and more could be coming throughout the course of today or the coming days, according to posts he made on Truth Social earlier. So we want to get into all of it now and turn to Bloomberg Washington correspondent Tyler Kendall, who is live at the North Lawn of the White House for us. So Tyler, clearly a lot of talk about trade, but plenty else to chew on here from this cabinet meeting.
Yeah, hey, Kaylee. A lot about trade, as you mentioned there. Of course, the news when it came to copper was the big headline out of this. We didn't know the date or the rate, but we did know that this was coming. U.S. imports of copper surged to a record high in April ahead of these expected tariffs. But it likely is not welcome news to our trading partners who are negotiating the so-called reciprocal tariffs. And that's a really interesting thread to pull on here, since we know that the sector-specific tariffs have really complicated these talks. But our original understanding of these tariffs that are enacted under Section 232 on national security concerns is that they weren't supposed to be negotiated, but we have seen them really come into the discussions when it comes to some of our trading partners, such as South Korea and Japan, particularly around autos, but also steel and aluminum. When it came to him hinting at the future for pharmaceutical tariffs, that's likely not going to be welcome news for the European Union, which President Trump said could see a tariff letter in the next 2 days. That was quite the development, considering that our understanding had been that these letters were going out to the trading partners that the U.S. is most frustrated with when it came to the ongoing negotiations. But we've gotten some indications that there actually had been progress when it came to the European Union. So a lot of different threads to pull on there, but trade definitely did dominate the conversation. He said that these letters could reach up to 60 or 70%, Joe and Kaylee. That would be quite the escalation, considering that we've really only seen marginal differences with the tariff rates so far outlined in these letters.
Talked about the Fed as well, Tyler. Suggested that Jay Powell should resign immediately, said he's always late, and appears at one point to be telling Scott Bessent in that conversation that he likes him better than Powell. There's an important piece of news that we learned in this meeting as well, Tyler. Benjamin Netanyahu is coming back to the White House tonight. What do we know about this?
Right. So according to the Israeli Prime Minister's office, they will be meeting here at the White House at 6 p.m. Eastern. Of course, this comes after the meeting that we saw yesterday, followed by that state dinner. And we did hear from the special envoy, Steve Witkoff, during this cabinet meeting, who said that he felt they were making progress towards this idea of a 60-day ceasefire. This is something that the Trump administration has put forward, but the discussions have, of course, been complicated. We did see Israel send mediators to Qatar over the weekend in a sign of support for the administration's plan, but we haven't really gotten updates on how this had been progressing, except for that Witkoff did say that they were nearing some sort of agreement that could see 10 living hostages released. As we await more details, we could hear later on from the White House about exactly how the future of negotiations are going to evolve. But of course, a significant development that the Israeli Prime Minister is coming back for a second meeting.
Well, and Tyler, elsewhere in geopolitics, the president reiterating that he's not happy with Russian President Vladimir Putin right now after yesterday saying that the U.S. will continue to send defensive weapons to Ukraine after the Pentagon had tried to put a pause on that. Quite a shift in policy and tone.
Right, exactly. Quite a shift, considering him saying that he is upset with the Russian President Vladimir Putin, and also praised Ukrainians for their bravery in his words. He did say that they are going to send additional weapon stockpiles to Ukraine. He didn't exactly elaborate on what kind of weapons, but did say that they would be defensive artillery. It was after this brief pause that you mentioned where the U.S. was assessing our stockpiles. Interesting to hear the President of the United States talking about the DIB, the Defense Industrial Base, which we often touch on, this idea that the Pentagon wants to see it revitalized, considering that a lot of the pushback, perhaps when it does come to sending aid abroad, has been from some of those conservatives that want to see our own stockpiles built up first in the United States. But the Pentagon does have some of these more bureaucratic methods when it comes to building up our industry. So President Trump, clearly they are trying to push forward some sort of momentum to get these sides talking. We do know that he spoke to Zelensky most recently on Friday, Joe and Kaylee. The president saying that ultimately these conversations, this push towards a ceasefire is proving more difficult than originally expected.
Bloomberg's Tyler Kendall live at the White House. Tyler, thank you so much. As we watch this cabinet meeting resolve here at the White House, I want to add the voice of a member of Congress, not here in Washington, but Brian Babin represents Texas as a Republican and is a member of in fact, chairman of the House Science, Space, and Technology Committee, the 36th District. Kaylee, thank you so much. Congressman, great to have you with us here on Bloomberg TV and radio. I'd like to ask you about some of the issues that we heard discussed in this cabinet meeting, but as chairman of this important committee that oversees the National Weather Service, And as a member of the Texas delegation, I want to ask you about President Trump's plans to visit the flood zone on Friday. Is this the right time for him to be there?
I think so. I think, we've already had Christy Nome down there, the DHS secretary, the state of Texas, our Texas Department of Emergency Management, the governor, the lieutenant governor, my colleague in the House of Representatives, Chip Roy, who represents that stricken district, have all been there doing a yeoman's work. Even NASA, which I represent and have jurisdiction over, our committee does at any rate. NASA has aircraft that are flying down there. Air National Guard has MQ-9 Reaper drones that are going up and down the river valley looking for people as well. We're in the this is the search and rescue. We're still in it, and we are determined to find everybody that was lost. And then we can start talking about what we can do to go forward. But we want to do things that will never allow this to happen again.
Well, and in that vein, Congressman, understanding that you obviously have a personal connection to a lot of the affected communities here. Your granddaughter, we understand, attended Camp Mystic and left shortly prior to the floods. We wish you and your family well. Experiencing this, yes, as a Texan, as a human being, but also as chair, as Joe mentioned, of the House Science, Space, and Technology Committee, does the National Weather Service need to do something different in the future to ensure this doesn't happen again? Do you have a preliminary understanding of what went wrong and what needs to be fixed?
Well, I don't have a complete understanding. I mean, it's a little early. Like I said, right now it's search and rescue. These hard questions are going to be answered, though. I can tell you, we're going to have some hearings. I'll give you an example. The president's budget, it came out. The Office of Management and Budget came out with what they call their skinny budget. The Trump administration is not cutting the National Weather Service. It's they got 66 million more for FY26. They have only spent about half of what they have current year funds as well. So they were fully funded. They were fully officed, fully staffed. The system, I think, is working as intended. We lost lives, and that means that absolutely we've got to do more. And I'm the chairman of this of the Science Committee, and we're going to, as I said, we're going to conduct a thorough review of this event, and we're going to ensure through that legislation, like the Weather Act reauthorization for one, is focusing on improving forecast communications, local coordination, and continued technological advancements and innovation. Our goal is going to be very, very simple. And that is to make sure that communities have every single advantage when severe weather does strike, and ensure that NOAA and the National Weather Service is able to meet those goals and protect lives and property. And that's what we're going to do.
Are you getting what you need from the federal government? I know President Trump has offered the help that's needed, but what does Texas need now that it may not be getting?
Well, I think we have a lot of volunteers. We have, as I said, NASA has contributed aviation itself. We've got a lot of people that are flying over that river valley. People are walking up and down that river valley, miles and miles, and it's tragic. They're calling their children's names out. There are people who have. In fact, there was I just saw on television just a second ago a young man was looking for his parents and hasn't been able to find them. He's sticking with the program. He's not going in. He's going to continue to work to walk. He wants to find other people's lost loved ones. This is what I think Texas is all about. And these camps. You ask about my history with these camps, and I can tell you these girls and boys camps have been there for a century. My father-in-law went there as a camper, a camp steward for boys. As you said, my granddaughter was in the first term of session at Camp Mystic, and I had a second granddaughter that was supposed to be in the second session.
Wow!
But she was diagnosed and she injured her knee, and she was unable to go to the second session at Camp Mystic because of a torn meniscus. This is the first time. It was a godsend.
Wow.
That we could say that spared her from who knows what.
Yeah.
So she got
Well,
to have
we're
her
thankful
knee operated on.
that your family is okay, Congressman, and we appreciate you joining us here on Balance of Power. That's Republican Congressman Brian Babin, representing the 36th District in Texas, chair of the House Science, Space, and Technology Committee, with us on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. equities trading mixed, but we begin with copper. Copper futures on the COMEX surging as much as 17% after President Trump said he planned to implement a 50% tariff on imports of the metal. Right now we've got copper trading higher. Copper up by 9.7%. Couple of copper-related equities. Freeport-McMoran surging now. FCX on the ticker up by 4.8%. Southern Copper Corporation up by 0.3%. Stocks have been fluctuating as investors react to President Trump's decision to delay increased duties on several trading partners. S&P 500 index bottom line here trading little change, down 3 points, down less than 0.1%. Again, the S&P has been fluctuating. Right now it's 62.26. Dow Industrials down 167, drop there of 0.4%. Nasdaq higher by 12, a gain of 0.1%. The Bloomberg Mag 7 index lower little change today, down less than 0.1%. 10-year currently holding at 4.42%. The 2-year 3.91%. Spot gold down $29 the ounce, down 0.9%. West Texas Intermediate crude up 0.9%, 68.54 a barrel. But again, watching commodities, specifically copper. Right now we have got copper trading higher on the COMEX, up by 9.7%. Recapping U.S. stocks trading mixed. The Dow and the S&P, they're both lower. Nasdaq higher. S&P right now down by 0.1%. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Keeping an eye on the markets and the reaction we're seeing in copper to the president's announcement during a lengthy cabinet meeting at the White House that just wrapped up moments ago, that 50% copper tariffs will be implemented effective today. Of course, that's not the only news the president made on the trade front. He also suggested that more letters are coming for trading partners, setting the rate of tariffs they will pay effective August 1st. And interesting, Joe, to hear him characterize the date change from what was supposed to be tomorrow's deadline, July 9th to August 1st, not as a change, but as a, quote, clarification, maybe.
Yeah, maybe was the key word there. It was July 9th. I think the market's been pretty obsessed with that. It is now August 1st, as of yesterday. He said more, too, suggesting that it's too time-consuming to make deals, and said that a letter means a deal. And this is where we start with our political panel today. Rick Davis is with us, of course, Bloomberg Politics contributor and partner at Stone Court Capital, a Republican strategist, alongside Jeannie Shanzano, senior democracy fellow at the Center of the Study of the Presidency and Congress. Great to see you both here, and thank you so much for your patience. This was a more than 90-minute long cabinet meeting. Rick, is Donald Trump getting bored with his own trade policy here? He says it takes too much time to make deals.
Takes too much to make deals, but he's not going to change any more deadlines. But he's still thinking about new sectoral sanctions. Made some news around copper. No telling what the futures are going to do now. And is still looking at some massive tariffs on the pharmaceutical industry a year from now. So, I mean, it is for a guy who's getting bored with them, he sure seems to be doing more and more and more around them. And so I think we are into a tariff cycle that will not end in his presidency. And so buckle up and get used to it. I think it's one of his favorite words. He said so, and it dominated, I think, the news coming out of this cabinet meeting.
Well, so whether or not we want to characterize it as boredom, Jeannie, what about just the notion that President Trump seems to be losing patience, not just on the efforts to find trade deals, but also other deals he was pursuing, like an end to the war between Russia and Ukraine, as he also, again, in this cabinet meeting, expressed some displeasure with Russian President Vladimir Putin?
Yeah, I think he made some news here on this Ukraine issue. Number one, he refused to talk about or to say whether Pete Hegseth had told him in advance about the pause on munitions to Ukraine. That was notable because he, the other day, as we know, told Vladimir Zelensky he did not know about that in advance. So the fact he refused to say, I thought, was notable. And also notable, to your point, Kaylee, was the idea, to me at least, that a U.S. president was shocked that Vladimir Putin is not good for his word. And so to me, that speaks volumes about Donald Trump as somewhat of an optimist, and now suddenly seems to be shocked that he can't count on Vladimir Putin. I also think the third thing I would say about this is who is losing in the Trump administration on foreign policy? Those are the isolationists. This is a president who is now clearly gone with the hawks, both in Iran and now it seems to be as you look at Ukraine and Russia. And this is at a time when, of course, the isolationists and the far right wing of the MAGA are unhappy about another thing they talked about, which was Jeffrey Epstein. So not a good day or a good week for the more far right on the MAGA wing here.
He got really upset with the Jeff Epstein question, in fact, and asked the reporter why they would even ask such a thing. Rick, we learned that Benjamin Netanyahu is coming back to the White House tonight. This was another tidbit that the president dropped. We later learned from Netanyahu's government that they would meet at 6 p.m. That meeting has now been moved up to 4:30 p.m. What do you make of the return trip to the White House? Will it result in a ceasefire announcement?
Well, a lot is on the risk for this ceasefire. One, I think the president is sincere in wanting to get peace in the region. And I think that there's a great reward for that because if he can establish a ceasefire and an end to the war with Gaza between Israel and the Palestinians, then it unlocks potentially a Abraham Accord, not just with Saudi Arabia that the president has really been anxious to do, but also with other potential countries like Syria in the region now that diplomatic relations have been renewed with them. So he's got a real gambit going in the Middle East, and he wants to ride the momentum that he's got. And I don't think Bibi is getting out of town until he gets a deal on these ceasefires with Gaza.
Well, and for President Trump, Jeannie, it's also the pursuit of the Nobel Peace Prize, right? Is that ultimately what he wants with everything we just discussed? Ukraine as one example, but the Middle East is another.
That's right. And we've also seen he would like to get it for the peace between India and Pakistan, however long that lasts. And that was one of the notable things we heard from Benjamin Netanyahu and the president last night. But to me, the most notable thing we heard last night was the question about the day after, when Donald Trump deferred to Benjamin Netanyahu. And then Benjamin Netanyahu talked about sort of a removal or a choice that Palestinians could make about their future, but left off that choice was a Palestinian state. And so, missing from Benjamin Netanyahu's idea of what the future and choices could hold is this idea of a two-state solution, which is probably the only solution we should be thinking about long-term, of course, as it pertains to the Middle East. And so that was, I think, the biggest news last night. And why Donald Trump is deferring to Benjamin Netanyahu on that, I think that's a major question that the U.S. and the administration has to answer.
All right, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors in our political panel today. Thank you for joining us here on Balance of Power on Bloomberg TV and radio. And we're joined by a guest we haven't seen in a while. Mick Mulvaney is back here with us in our Washington, D.C. studio now. He's, of course, former acting White House chief of staff, former OMB director, former Republican congressman from South Carolina, co-founder of the House Freedom Caucus. Welcome back, sir. Good to see you. As always, with this conversation we just had, knowing that President Trump is fresh off of a massive legislative victory, the one big beautiful bill having passed, hard fought, yes, but ultimately passed by the deadline he wanted. Is the hardest work still ahead of him with everything we've just discussed, trying to get what he wants on trade in the world in terms of geopolitics?
The hardest legislative work is done. I don't see anything else passing of any real significance. Now, they do have another reconciliation bullet. I know that's real deep in the weeds, but keep in mind there's actually 2 chances at reconciliation this year. So they've got another sort of bullet in the gun if they decide to try and do something else with reconciliation. I've not heard much about that. But I think the legislative work is done. Everybody knew once the big, beautiful bill passed, that was pretty much the end of it. So now it shifts back to what Trump really likes doing anyway, which is the executive stuff. Look, is going to be dealing with Vladimir Putin hard? Yes. Is trying to negotiate peace in the Middle East hard? Yes, it is. Is it harder than the one big, beautiful bill? Probably. So listen, it's not going to get easier, but it's not an easy job to begin with. But I think the legislative work is probably finished. Certainly the appetite, I think, in the House and the Senate to do with anything else that massive is very, very low. They want to start running for re-election. But there's going to be a lot of stuff to do, to your point.
I want to ask you about the influence or lack thereof of the Freedom Caucus, which you helped to found.
Yeah.
You watched all of this unfold last week, from Andy Harris to Chip Roy. Hell no was the answer. We're not going to get jammed by the Senate. We know there were a lot of side
if I had $1 for every time I had said that.
Well, so bring us home on this, because there are a lot of questions about whether the Freedom Caucus that you helped to found is still relevant.
Well, it's certainly relevant. Any group that can sort of stick together is relevant, especially when you've got a margin of just a handful of votes in the House. Any group of 4 or 5 members who can really stick together can sort of change an outcome. And I think the Freedom Caucus, individual members of the caucus did play important roles. I think Chip Roy played an important role in trying to, make the bill better when it was in the House. Yeah. And certainly the fear of the Freedom Caucus sort of of walking on the bill when it came out of the Senate did influence how far to the center maybe the Senate would go. But if the criticism is that the Freedom Caucus is different with Donald Trump in the White House, the answer is yes. It is. We started as a fiscally conservative group. If Barack Obama had offered that exact same bill, I don't think that the Freedom Caucus would have supported it. They are now they are the sort of the foot soldiers for the Trump presidency. They have been since the first term. So they are less about spending now and more about MAGA. One of the pieces I read that I thought was very insightful was that this is absolutely Trump's party now. It is. There are still going to be folks talking about spending less money and all that and efficiencies and so. But this is Trump's party. Whatever Trump says, Republicans are for. Now the party is for. We are now for massive tariffs on copper. Period. Wow. End of story. Until next week when we're not. Right. But right now we are. And I think the Freedom Caucus is along for the ride, just like everybody else.
But on the subject of spending cuts, which obviously they did not get as many as they wanted in the reconciliation bill, do you see real opportunity for them to get it elsewhere in the form of rescissions? Because we aren't necessarily seeing much advancement on the rescission package that already passed the House and the Senate. Major question as to whether you can get adequate support.
I will buy Joe dinner if the Senate passes that rescission package.
What about Kayleigh?
So, well, like if I say I'm going to buy a nice young lady dinner, people are going to accuse me of being inappropriate. So, I'm going to no, I'll buy Joe dinner and but whatever. Like, no, the rescission package is not going to pass.
Just this one, or
no, I don't think any of them will.
Because Democrats are needed to write a budget.
Here's why. Okay, spending is bipartisan. It has to be, because a spending bill takes 60 votes in the Senate. A rescission vote only takes 50. Okay, it's a special rule. It's another one of those. It's like reconciliation in that sense. So if you're a Democrat and you cut a deal with the Senate, your Republican members just a year ago to get a spending package passed, and then the Republicans go off by themselves without you and sort of thumb their nose at you and say, well, we're gonna undo this spending that we just agreed to. What do you think that does for next year's spending package? It kills it. Then you end up with CRs and all this kind of stuff. We talked about, is there any other legislation going to get passed? No, and especially if the rescissions package passes. Keep in mind, and I lose track of the days, I think the rescission package dies
July 18th.
Okay, yeah, 9 days. I had 10 days in my head or something, whatever it is. So look, Washington is always better at doing nothing than doing something. And if the Senate can sit on their hands for the next 10 days and say, oh, well, we just ran out of time on rescissions, I just don't see them doing it because of the dynamics within that building.
Do you believe Donald Trump when he says August 1st, even if this was always the date, doesn't move again? There's no extensions?
I think somebody said yesterday, it might have been on this network, that the market just has given up now. They throw their hands up and they don't even listen to what Trump says anymore because they don't rely on it. If you relied on July 9th, then you're off. You can't invest based on that.
That's right.
You can't invest you can't trade at least based on the August 1st. You throw your hands up and say, look, it's gonna come as it does. Do I think the August date can change? Sure, it should. Did I predict that the July 9th date would change? Yes. Why? Because this is the reason no one else got. He doesn't like strange numbers. He doesn't like July 9th. He likes July 1st. He likes July 4th. He likes August 1st. They're easier to sell. It's a black and white sort of thing. July 9th is what is that, like a Wednesday?
It's tomorrow.
Yeah,
tomorrow,
Wednesday, yeah.
That's not good for news. That's not good for marketing. So look,
that's why he brought Japan from 24 to 25%, right?
Well, listen, we talked about it. You joked. Did he do that, by the way? I haven't heard that.
Yes.
So I go back to 2017 when we're trying to negotiate the corporate taxes on the first tax cut, and I think Cohn came back. We wanted 20%, and Gary Cohn and Stephen Mnuchin, who were leading the negotiations, came back and said, well, Mr. President, we think we get 21. He's like, 21? I can't sell 21. 20 or 25? 20 or 25, guys. Wow. It's not 21. So yeah, that's how he operates. It works for him. But the point is, You can't trade off of it. Could August 1st change? Yes. It's not going to be August 8th. It could be September 1st. But yeah, there's going to be a certain uncertainty in what comes out of the White House. It is the cultivated, he loves the term strategic ambiguity. He doesn't want to get pinned down, and he's not going to. If deals go forward, great. If they don't, we might look at changing the date. We might not. Who knows?
Right. Another 2-3 months before we see you?
I hope not.
Okay, well, so no.
Are you guys here every day?
Yeah, we try to be.
Oh, yes.
Mick
Twice a day,
Mulvaney,
in
if
fact.
you don't recognize the name or the voice. You know the business card. We don't have to do that right now, do we? Thank you, Mick. It's great to have you. Alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is a Bloomberg Business Week on this Tuesday, July 8th, 2025. I'm Tim Stenevec. Carol Masser is out today. Bloomberg News cross-asset reporter Emily Graffeo is here in her place. Emily, the market's doing, well, kind of a whole lot of nothing.
Yeah, the S&P 500 is basically flat. Bonds are moving a little bit more, at least on the longer end of the curve. But overall, it seems like even amidst all the tariff headlines, the stock market is relatively calm, Tim.
Well, those tariff headlines are our focus for Bloomberg Business Week Daily today. We are going all in on tariffs and trade policy, and we got a great lineup of folks joining us. We're going to be joined by our Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific on the latest when it comes to trade policy. Also, for what investors are doing and should do, Libby Cantrill from PIMCO is going to be joining us.
We're also talking oil and a muddled picture for demand. We'll be joined by Ellen Wald of Transversal and the Atlantic Council. And Bloomberg Opinion's Mark Gongloff asks, are we prepared for the next deadly floods? The answer, unfortunately, is no. He'll explain.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of that trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. We're looking at a mixed market right now with the Dow lower, the S&P, NASDAQ both higher. I got to begin with copper, though. Big story. President Trump, you heard it on Bloomberg television and radio. He says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX by as much as 17% to a record right now. Looking at copper, and copper is trading higher by 9%. Freeport, McMoran, and Southern Copper among the names moving higher there. On the equity side of things, FCX, Freeport, McMoran up now by 4.3%. Southern Copper up by 1%. The Chile peso, the Peru sol at session highs on those copper tariff comments. Also ECH, that is the iShares Chile ETF, up now by 1.4%. Stocks, however, fluctuating as hopes President Trump is still open to trade talks offset his remarks that the U.S. will not offer extensions to the August deadline for reciprocal tariffs to kick in. S&P now higher by 2, up just under 0.1%. The Dow slumping 125, down 0.3%. NASDAQ up 39, up by about 0.2%. 10-year 4.42%. The 2-year 3.90%. Spot gold down $29 the ounce, down 0.9%. West Texas Intermediate crude oil up 0.8%. Bitcoin now higher by 1%. 109,017 on Bitcoin. Again, WTI, a topic we'll be exploring on Bloomberg Business Week, up 0.8%, and cannot ignore the move in copper. Bears repeating copper right now, surging by 9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Sort of to build on some of those headlines that we just heard from Charlie, that tariff situation evolving quickly. We did hear from Charlie just now on copper, reaching a record after the president said that he planned to implement a 50% rate on copper as part of a set of looming sectoral tariffs, also threatening a 200% tariff on pharmaceuticals. Now, earlier, and this is what got markets moving a little bit, earlier in the day, the president said on social media he would not offer any extensions for the implementation of increased tariffs on many goods imported into the U.S. He pledged that new rates would hit at the beginning of August. In other words, no extension. Here's the president during his cabinet meeting earlier this afternoon.
Almost every country charges us tariffs. We had deficits with everybody for years, for decades. And we were like this big monolith that made bad deals with everybody. We rebuilt South Korea and we stayed there. It's okay, we rebuilt it and we stayed there. And they pay us very little for the military. I got them to pay billions of dollars and Biden then canceled it when he came in. I said to South Korea, as an example, we give you free military, essentially, very little. And I think you should pay us $10 billion a year. And they went crazy. But they agreed to 3.
Well, there's President Trump earlier in his cabinet meeting. For more on the evolving tariff situation, we're joined by Adam Ferrer, Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific down in our Washington, D.C. bureau. Adam, the letters that the president has posted over the last 24, 26 hours or so, does it offer clarity on the situation with tariffs? Is it certainty now?
I think in many ways it's the opposite, right? We now have another tariff deadline of August 1st, and the president insists that this tariff deadline won't move. But we've seen already 2 tariff deadlines move, and there's certainly a possibility that this new deadline can move as well. The big takeaway is that countries that are in tough negotiations, particularly larger trading partners like Korea and Japan, that were reaching real difficulty in their discussions as they reach the complex issues like agricultural imports and auto tariffs, have been given a lifeline of 3 weeks to further negotiate with the U.S. government and try and find a solution before that August deadline. But overall, I think we need to be careful to be clear that the letters really were not news. Overall, they changed the tariff rate marginally in a few cases, with some going up and down, but they remain, reciprocal tariffs are not on the table right now and aren't scheduled to come on until August 1st.
So what does this mean now for at least the rates that we've seen already negotiated, particularly Japan, South Korea? As you mentioned, they're kind of the same numbers that we saw Trump announce a couple months ago back on that Liberation Day. What has changed this week as that July 9th deadline approaches?
So honestly, we can't speak to why we had these marginal changes in the reciprocal tariff rates, the differences between April 2nd and these letters. But we can say that we know that there are lots of detailed ongoing trade discussions between these countries and the administration, at least countries like Korea and Japan, and to some extent Indonesia and Thailand. It is worth noting that in addition to those major trading partners, we also saw letters go out to tiny trading partners like Bosnia and Serbia, which have a trade deficit under $1 billion with the United States. So it's unclear why they were grouped in the way they were or what comes next in terms of the additional letters. But with Scott Bessent saying that we're going to see 100+ letters over this week, we should expect to see them for most countries.
Mexico, Canada, and China are the 3 most important, I think it's fair to say. They're certainly the 3 largest trading partners with the United States. In a sense, are really the top 10 trading partners really the only ones that matter, Adam?
Depends on what you mean, but I think overall for imports and the impact on U.S. consumers, it certainly is far weighted in the direction of those countries. But as you just highlighted, China, Canada, and Mexico are not part of this reciprocal discussion.
Exactly.
and have different dates, although now we have merged the China deadline to some extent with the rest of the world. Obviously, Canada and Mexico continue to move separately, and lots of attention going to those discussions, but they're happening quietly on the sidelines, and we don't have updates on where they stand.
What about these rates on various commodities and pharmaceuticals that Tim mentioned at the beginning of the show? Trump said he planned to implement a 50% rate on copper, and then he also threatened this 200% tariff on pharmaceuticals. How different is that from what he had proposed previously?
So we've been waiting to see where the administration was going to come out on these new sectoral tariffs, particularly related to copper, semiconductors, pharmaceuticals, and there are a handful of others, including on lumber, that we haven't heard about. The reality is that copper is probably at the lowest end of the spectrum. It accounts for about $17 billion in U.S. imports. At the same time, that demand is probably relatively inelastic. Companies and producers in the United States that rely on copper are still going to need copper, and so they're likely to just see a big increase in their costs if and when this goes into effect. I would highlight that the president didn't give a date as to when this would go into effect. On the pharmaceutical side, obviously, that's a much bigger deal. We're talking about over $200 billion in U.S. imports, and obviously a key item for U.S. consumers and the general economy. But again, here we see a big number, 200+% threatened, but also the potential for a year plus of delay as he works with pharmaceutical companies to address the inequities that he sees in the market.
The president has often spoken of countries themselves paying for these tariffs. What's the view that you have? Who pays for these tariffs?
I think time and time again we've seen in the data that while there is some split going on, and it depends a bit on the product in question, overall consumers and importers are the ones paying that fee. And so at the end of the day, it accounts for an additional tax on consumers in the United States. And particularly for items like pharmaceuticals, where you're not going to have a lot of people who can go without. They're just going to pay higher prices.
Adam, what do investors, people who watch markets and headlines, need to be keeping in mind right now when it comes to just how much more change are we going to see in these tariff rates that have already been set from now to potentially August? Should investors be basically preparing for many, many more headlines of deals still being negotiated and these rates changing?
Well, at the start, we're expecting these additional letters, and in those letters, we could see different rates than we had seen originally from April 2nd. So that's something folks will have to take into account. But again, those don't go into effect in theory until August 1st. I say in theory because obviously the president has shown a willingness to adjust on the fly, depending on what he sees both in the market and in his engagements with these countries. But I think the biggest takeaway needs to be the reality that what we're seeing today are not so much trade negotiations, but rather the implementation of tariffs and locking in those tariffs. In the few agreements we have seen between the United States and the UK and Vietnam, the administration successfully locked in tariffs at 10% for the UK and 20% for Vietnam, and potentially up to 40% for items that are transshipped. So what we're seeing here, again, are not traditional trade negotiations, but rather a discussion of how tariffs will be implemented and how high that wall will be.
Perhaps, though, Adam, if somebody from the Trump administration were here, they might say, this is a negotiating tactic, or this could be a negotiating tactic. We could at any moment pull those tariffs that you speak of if we get what we want to see. What do you make of that?
So that's certainly possible, but I think what we've seen so far from the administration, and certainly from what the president has said, is a desire to reset the trading order and to do it via tariffs. And so while there's a possibility on the table that they could go in any direction they see fit, the reality seems to be that they want at least a 10% baseline on the table for most countries, and that in many cases it would be significantly higher. The question does become when those tariffs really start to bite in the economy as we move into the latter half of the year and into 2026. Will they be willing to kind of hold their nerve and continue those tariffs, or will we see them start to fall?
Yeah, a lot of people still waiting for those tariffs to bite. Adam, thanks so much for joining us this afternoon. Really do appreciate it. That's Adam Fair, Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific from our Washington, D.C. Bureau. So that was the latest on the evolving tariff situation. For how investors are trying to weather this and figure it out, let's bring in Libby Cantrill, Managing Director and Head of Public Policy at PIMCO. She joins us here in the Bloomberg Business Week studio. Libby, I want to start with trade policy and tariffs, and then we'll get to the president's domestic policy win. I'm going to ask you the same question that I just asked Adam. For investors, though, is this a moment of clarity?
I'm not sure if it's a moment of clarity. I mean, I think in some ways it reinforces the president's conviction around tariffs. I can wholeheartedly agree with what Adam was saying. I mean, I think that there's sort of this view in the marketplace that Trump doesn't really mean this. There's sort of this whole taco meme, right? That Trump always chickens out. I think on trade in particular, that has not been the case. If you just look at where the effective tariff rate is right now on all U.S. imports, the average effective tariff rate is around 14%.
Right.
So
that's up from, what, 3% or so
going
earlier?
in as of January.
Okay.
So regardless of what happens on August 1st, and we do think that there will be some sort of sacrificial lambs, if you will, but I think that the sort of the signal from the noise here is that tariffs are already high and they are likely to go higher.
So you don't think the extension to August 1st that we learned yesterday and even got more information on today, you don't think that's, some people are saying that's taco?
Sure. Is it more of a window
It's not July 9th.
for further negotiation? Sure. But I do think that maybe even with some of our negotiating partners, they weren't taking Trump very seriously. And I think this is, in many ways, he's trying to reinforce that this is not just a threat. And again, I guess from an investor perspective, the reason why you care about tariffs is you care about what's going to happen with the economy, the macro economy, with companies, with inflation, and in the case of bonds in particular. And I think that the bottom line here is that tariffs are already high. So regardless of what happens on August 1st, we do think we'll start seeing some fragility from an economic perspective. One thing that has not been mentioned that I do think is worth maybe reinforcing for investors is that this is getting a little wonky, but the statute that the president is using to impose these tariffs, something called IEPA, the International Economic Emergencies Powers Act, that has already been found in court to be unlawful to impose tariffs. We do think that the Supreme Court will likely hear this, and they could also decide that this is unlawful, meaning that come December, whenever the Supreme Court were to rule on this, if they were to overturn this, all of these tariffs, the reciprocal tariffs, the 10% baseline tariff, all of those would go away. So I think this is something that's also important, is that while we think that the president should be taken both seriously and literally in terms of his tariff threats, we think he really believes this. He really does have conviction and commitment to sort of reshaping the global trading order. There is a possibility, and probably a high possibility, that come December or January, whenever the Supreme Court does hear this, is that they could overturn this. And that could obviously cause just another inflection point. Now, the last thing I'll just say on this, again, kind of wonky, is that the president has other tools, other legal tools that he can use to impose tariffs. One is this, what's called Section 232, and that is going to be the tool that he's going to impose things like the copper tariffs. He's already imposed aluminum and auto tariffs on using that tool.
Do you think that's why the market has been relatively calm in the face of all of these headlines back and forth about the different tariff rates, that investors are maybe holding out hope that we won't have that much of tariff policy change come end of the year?
The equity market, right? I mean, of course, we're a bond house, and so we look at the equity market, but I think bonds are probably taking the president a little bit more seriously. I think the equity market, is wanting to believe what it wants to believe, and I do think there is this assumption that President Trump doesn't necessarily mean this. And of course, I mean, to the credit of the equity market, we haven't necessarily seen the pass-through from tariffs to either consumer prices or hurting sentiment necessarily. So there has been reason to be bullish, and of course, we just got the one big beautiful bill done. There wasn't much time for celebration of that in Washington or in the markets for that matter. I think it's a little surprising that President Trump isn't spiking the football on that one a little bit more, because that is a huge accomplishment, honestly, regardless of what you feel about the bill, to get something that big over the goal line with such a small majority is a real accomplishment.
Well, we only have a minute left with you. Let's talk a little bit about that and the idea of widening deficits. And I'm curious, given the fact that PIMCO's a bond shop.
Yeah.
Why do you think that we're not seeing bonds react to the idea of this widening deficit?
Well, you have, and I think you have seen over the last 6 months, you've seen a steepening of the yield curve. You've seen, obviously, that, April 9th sort of temper tantrum, if you will, and the long bonds selling off by a very significant amount. So I think
that was a tariff over tariffs, wasn't it?
That was over tariffs, but it was, I think it had to do with the fact that there was already questions about deficits, about fiscal profligacy, about the institutions, all of those things. I think that there are a couple of things. One is that the U.S. dollar continues to be the reserve currency, that treasuries continue to be the reserve asset of the world, and that real yields also look pretty good. I think our view is that there's probably more value in the kind of the belly of the curve, the shorter durations of the maturities of the curve versus the long out. But you have seen, again, it sort of depends on where on the yield curve you're talking about. You have seen the long end, I think, digest some of these deficits.
Libby Cantrell, great to see you.
Great to see you.
Thanks so much for joining us. Libby Cantrell is Managing Director and Head of Public Policy at PIMCO, joining us in the Bloomberg Business Week studio. Coming up next, we are talking all oil and the effect of tariffs and trade policy on what's going on with the oil market. That's coming up next with Ellen Wald. This is Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are fluctuating as hopes President Trump is still open to trade talks offset his remarks. The U.S. will not be offering extensions to the August deadline for reciprocal tariffs to kick in. The S&P trading higher, little changed, again swinging between gains and losses. Right now up by 1 point, little change there. The Dow down 127, drop there of 0.3%, while Nasdaq higher by 27, up 0.1%. We've got the 10-year yielding 4.41%, the 2-year 3.90%. Spot gold down $32 the ounce, 33.04, and West Texas Intermediate crude oil trading higher by 0.7%, 68.41 for a barrel of WTI. President Trump, meanwhile, says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX right now by just about 10.5%. J.P. Morgan Chase, Goldman Sachs, and Bank of America all cut at HSBC on valuations ahead of earnings. J.P. Morgan Chase reports a week from today. Shares down 3.3%. Goldman down 2%. Bank of America down 2.7%. And this headline from the Bloomberg Professional Service: SpaceX valuation said to hit around $400 billion in a share sale. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. I want to talk oil and energy. Oil fluctuated as traders weighed President Trump's latest wave of tariff threats against French tensions in the Middle East. West Texas Intermediate crude flipped between gains and losses, hovering around $68 a barrel. This is a key psychological level that prices have only briefly breached in recent weeks. Meanwhile, another ship in the Red Sea came under attack. Also, traders have to understand exactly what's happening with tariffs to get an idea for demand. Watching all of this is Dr. Ellen Wald, president of Transversal Consulting, also senior fellow at the Atlantic Council. She's also the author of Saudi Inc. She joins us from Boca Raton, Florida. Dr. Wald, always good to check in with you, especially on a day such as today. I want to start with tariffs and really the way that traders are trying to understand oil demand for countries that have had tariffs implemented on them. How does this change the view of oil demand in the coming weeks, months, and years?
It's kind of contrary to what you might think it would be. Essentially, the idea is that if tariffs are going to go up, then that will mean lower economic activity in terms of trade. So if a product you're trying to buy from another country has a very large tariff on it, you're less likely to buy that product. That means there will be lower shipping, fewer products being shipped, for example, and therefore lower demand for the energy needed to ship those products. So the idea is that then if demand is going down, then oil prices will go down. But if tariffs are lower and lots of people are buying lots of stuff from all over the world, then demand will be higher and therefore oil prices will rise. So it's a little bit of the opposite of what you would think it would be, but that's generally how we conceptualize the way that tariffs impact oil prices.
I want to talk about OPEC as well, because they're increasing oil output, increasing supply. Just to help us understand in context how investors are supposed to understand what that's going to mean for worldwide oil supply and prices.
Yeah, it's a very interesting situation we're in right now, because we're coming off of this Iran-Israel war where prices kind of shot up and then went down, and then we had this kind of resolution, sort of, which led to essentially eliminating the war premium that had been on prices. So prices were down. Now we're coming off, then we head right immediately into this OPEC meeting where OPEC decides to increase more than probably was expected. And most analysts, I think the market expected that OPEC was going to increase maybe by another 400,000 barrels a day. They increased that. It's now almost it's closer to almost 600,000 barrels a day starting in August. And then there are some pretty sure signs that they're going to increase again in September. So that means we're going to see more supply on the market. I think they have some pretty pretty good ideas that, at least in OPEC's mind, that demand is going to be going higher, and so that's why they're looking to increase. But they've also, it shouldn't come as a huge shock because they've made no secret of the fact that they've wanted to unwind these voluntary cuts for a long time, and so this is essentially their plan. I don't think we'll see any deviations from it, and it's supposed to send oil prices lower. But then you have, it didn't actually send them as low as we might have expected. But again, I think we're going to see another increase from them next month. So you've got that on one hand, you've got these tariffs on the other. I think that the pressure is really on to get deals done. And if they can get deals done, then that indicates the demand is going to go up. And so there's really a lot of pressure now to see if we can get these deals done. Can they get done in less than a month? Not so sure if that's even really feasible at this point.
But Dr. Wald, even if deals get done, if high tariffs, say, 20 to 25%, 30% in some cases, if those remain in effect on these countries, even after a deal, that's bad for demand, right?
It's not good for demand. I think the idea is that if we see trade deals being done, then the tariffs will go away essentially. And I think that in a lot of cases we've seen these tariffs get implemented and then say 5 days later or less than 5 days later they get taken back down. I think what's interesting though is you have to remember that people might be putting in orders now for things that would come in a month or 2 months or 3 months, so they're having to plan ahead, and all of this uncertainty basically screws up everyone who's trying to buy something or sell something from overseas. So anyone who's dealing in global trade, which is essentially almost any business, is facing a massive amount of uncertainty right now. And demand does not like uncertainty. And so I wouldn't be surprised if we see prices start to decline in the short term, particularly because of all of this uncertainty, general economic uncertainty surrounding the tariffs and tariff issues and trade negotiations.
Dr. Wald, what are your current views on the state of geopolitical tensions? I know you had written previously about potentially the Strait of Hormuz closing and how that would affect the global economy and oil output. Should investors still be concerned that there are more geopolitical tensions to come that would affect the oil market in the near term, or is that risk not really present anymore?
I think there's always a risk of geopolitical tensions, especially when you're talking about countries like Iran and Israel and other countries in the Middle East. You're talking about China, for example. The risk is always there. I do think that the risk that the Strait of Hormuz could be closed, which is not something I think is really a feasible thing to do at the moment, but it could be the safety of shipping through the Strait of Hormuz could be threatened at some point. I think that likelihood is way far down now. As long as Iran is exporting oil, they really don't have any cause to threaten any other shipping. And President Trump has made it pretty clear that he gets it. China's going to keep buying this oil. Iran's going to keep shipping it to them. They're doing what they can to try to thwart it according to sanctions, but at some level, they're not going to be able to stop it. I think he wasn't saying he's going to relax sanctions, but it's going to happen. He knows it's happening. And in some respect, it does keep Iran from kind of having nothing to lose. As long as Iran can sell to China, in some respect, they have skin in the game. They're not going to really try to hurt anyone else going through the Strait of Hormuz. I do think that the Red Sea is an ongoing serious issue that really demands a lot more attention than has been given. And the fact that this is a really important waterway, it's not the only way to ship oil across the world. It's a lot, you can go around you can go around Africa, but it's a lot easier to go through the Suez Canal. And the fact that this is still an ongoing issue with ships being attacked there, I think that's a real threat to all of the global shipping, not just to the oil market, and that it really is a much more serious issue than perhaps the market is taking into account.
So that's the international view. I'm wondering about the domestic view. And certainly these are all tied together when it comes to the global energy market. But when we think about the United States and the president's stated goal of more energy production and more drilling here in the United States, in fact, we did hear from the energy secretary during the cabinet meeting talking briefly about this and about oil and gas. Is $68 a barrel, especially just a few weeks after oil was $58 a barrel here in the U.S., is that a high enough price for companies in the U.S. to start exploring more, to start drilling more, to start increasing production, especially given that we saw that increase in output from OPEC Plus over the weekend?
Yeah, I think that's a really good question. I think that for some companies it's enough, and for others it's not. And I do think that the real question here is, if the price of oil is going to be remaining around that $68 a barrel mark, what else can the government do to encourage drilling that isn't necessarily related to the price of a barrel of oil? What can they do to make it easier for these companies to deal with regulations? What can they do to decrease the length, the time, and the significance of lawsuits, for example? These are all things that companies spend a lot of money and time dealing with in order to just get to the place where they can even drill. And so what the government can do is, the government cannot change the price of oil all that much. They can't, say, oh, we want it to be high enough, this high, so that everybody feels comfortable, drilling more. But they can't change that. I mean, I guess technically they could set, they could try to price control, but that's a bad idea, and we're not going to do that anymore. But what they could do is they could help in the regulatory aspects. And if they can decrease red tape, help things move more smoothly, then companies will be much more inclined to go out there and do exploration and do drilling and things like that, because they don't have to spend as much time and money dealing with all the red tape. So that's one way they can make that $68 a barrel more valuable to companies.
Do we know if the government has plans to do any of that anytime soon?
Well, they say they want to. I mean, I've heard that they want to get rid of NIPA reviews entirely. That's this environmental review that often can take years and years to complete. Before they said, oh, we want to have them done in 3 months. Now they're saying, oh, we want to get rid of them entirely. But we need to see some actual concrete steps taken to do this, because companies can't just they can't make decisions about whether to allocate, massive capital expenditures based on something that the government says that it might do or that it wants to do. They're going to need to see, yeah, we're doing this. If you apply for a permit to do X, you can expect that it will be approved within, Z amount of time, and have that actually occur. And I think that if we saw something like that happen, you'd see companies much more willing to go out there and to drill more, to explore more, because they wouldn't be so afraid of all of the expenditures and the time that goes into that.
We only have 30 seconds left, Dr. Wald. How would you say demand is looking here in the United States? Because we like to look at that as a measure of how consumers are doing, how they're feeling, and what they're buying.
I do think demand is fairly strong. We have seen price forecasts decreased slightly, but I think that's more an indication of supply than it is demand. I'd say demand is looking pretty strong and pretty good, at least for the rest of the year.
Dr. Ellen Wald, always good to check in with you. She's president of Transversal Consulting, also senior fellow at the Atlantic Council. Her book came out a few years ago, Saudi Inc. Check it out. Joining us from Florida this afternoon, taking a look at how stocks are doing. We're seeing little movement. The S&P 500 down not even 0.1%. The NASDAQ is higher by about 0.1%. The Dow down close to 0.4%. Coming up next on Bloomberg Business Week Daily, we're going to be joined by Mark Gongloff. He's a Bloomberg opinion editor who covers climate change on lessons learned, if any, from the tragedy in Texas.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index higher right now, barely. Stocks have been fluctuating as hopes President Trump is still open to trade talks offset his remarks that the U.S. will not be offering extensions to the August deadline for reciprocal tariffs to tick in. S&P 500 index right now up by half a point, 6230, up by less than 0.1%. We'll call it unchanged on the day now. We've got the Dow down 126, down 0.3%. NASDAQ higher by 24. The NASDAQ Composite Index up right now by 0.1%. 10-year 4.41% with a 2-year 3.90%. Gold down $32 the ounce. Spot gold just above $3,300, $3,304, down by 1%. West Texas Intermediate crude up 0.7%, 68.40 now for a barrel of WTI. President Trump says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX by as much as 17%. Right now, looking at copper futures up by 10.3%. Amazon shares down 1.4%. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event, compared with the start of last year's sale, that according to Momentum Commerce. Prime Day does stretch over 4 days this year. And sources tell Bloomberg SpaceX is discussing plans to raise money and sell insider shares in a deal that would value Elon Musk's rocket and satellite maker at around $400 billion. Recapping, S&P little change, now down by 1 point. We've got copper surging by 9.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. Well, more than 100 people in several counties died in the floods that swept through the Texas Hill Country over the weekend, including dozens of children and counselors at an all-girls summer camp on the Guadalupe River. The proximate cause of the disaster was a brief but unbelievably intense deluge of the sort that has a 1 in 1,000 chance of happening in a year. In some places, 20 inches of rain fell in a matter of hours, and the Guadalupe surged more than 20 feet. Beyond that, Bloomberg Opinion's Mark Gongloff writes, there were few potential ultimate causes. Mark is Bloomberg Opinion editor who covers climate change. He joins us here in the Bloomberg Business Week studio. Mark, you have a new piece out on this. You write that this part of Texas is called Flash Flood Alley. You also write that flash floods were happening here long before the climate began changing. Is it too early for us to say that climate change attributed to this disaster?
Well, a day has passed since I wrote that, and we've actually got a new study out that does attribute a little bit of the rain to climate change. So there are rapid attribution models and companies that do this now. They say it was 7% more rain because of that. It's true that we've had huge floods in this area. Flash Flood Alley in Texas is not named that for no reason. And so they do get a lot of water. This was made more intense. So we're in this weird thing where we still don't know everything that happened in this tragedy and all the reasons that contributed to why it was as bad as it was. But the lesson I took away from it is that, climate change is making these things more devastating and intensify more rapidly. And this had the hallmarks of that, even if you can't get the thumbprint of it right away.
When I was reading your column, I was thinking to myself, who really is in charge of informing citizens, Americans, of extreme weather? If this thesis holds, there's going to be more extreme weather events. Who's supposed to be in charge of telling Americans what's coming next and how to prepare for it?
Yeah, and your question gets at the heart of one of the mysteries here that we still don't quite know all the answers to, but it's a daisy chain that starts with, say, the National Weather Service. You got meteorologists who say, oh my God, there's a big thing coming, and they tell somebody who tells a local authority, and the local authority then has to figure out a way to tell all the people. Now, one of the problems with, say, Camp Mystic or these places along the Guadalupe River is that this has been a thing that they've talked about for years because they have had big, devastating, deadly floods there. They've for years talked about, well, we've got these things that send text messages to people if there's a flood coming, but not everybody gets the text because they're in these hills and they don't have good cell phone coverage. And so maybe we should put some big sirens on the river that sound off so nobody can miss it when it goes off, but they haven't been willing to pay for that yet. So it's somebody dropped the ball along the way. People didn't get text messages. Some did, but many didn't. And unfortunately, you need everybody to know that a disaster is headed their way. And right now, we are dropping that ball somewhere along the way.
You know, the National Weather Service has come under scrutiny in the days following this. We did hear from Department of Homeland Security Chief Kristi Noem, who said that President Trump is upgrading the National Weather Service. What do we know about that?
Well, again, the first thing we know is that far from being upgraded, the NWS is being downgraded. It's losing a bunch of jobs, losing a bunch of people. It's not able to launch weather balloons as often. There are a whole bunch of pictures to the mosaic, pieces of tile for this mosaic that helps us build a picture of what the weather's going to be that we're starting to miss because of this. Now, that said, various sources have suggested that the NWS did the best it could do in this situation. It did its job. There were enough people there. It gave dire enough warnings. It was like, look, guys, the rivers are going to flood. There could be deadly flooding. You know, get to higher ground. It said that. Now, not everybody got that message. It didn't predict 20 inches of rain, but there's only so much it can do right now. But with the degradation that we're seeing under Trump right now, we are going to see more and more instances potentially in the future where people don't get the right messages, where people don't get the right warnings. And that's the fear that I have.
What about this idea of warning fatigue? And I can tell you right now, on my phone, messages today have popped up. It's 93 degrees in New York City. I've already gotten a message about severe thunderstorms tonight pop up on my phone. I've also gotten one about flooding until 2 a.m. tomorrow morning. But I just swipe these aside because I get these so much.
Yeah, I mean, fatigue, warning fatigue is a huge potential risk here because you are getting these alerts. You're like, oh my God, here we go again. And if we have worse weather forecasting, the risk of that rises because you might be told, get out of your house, it's going to flood, and then it doesn't. It's the boy who cried wolf again and again, and then the fifth time it actually does flood, and you should have listened to that warning. The thing that we can't do, it's sort of like climate change writ large to some degree. You know, the thing we can't do is become inured to the disasters, become inured to the changes, become inured to the suffering that people are going through, because it's very easy to do. You know, we're adaptable human beings. It's just our evolution. We adapt to anything, you know. But there are some things we don't have to adapt to this. This flood didn't have to be that deadly. We may have a lot of floods, but we can figure out a way to get people to higher ground and save lives. We don't have to have campers drowning, God forbid, in storms like this, but it happens all the time, mainly because of our failures. Now, we are also failing to protect the climate. We need to stop burning fossil fuels more quickly because these disasters will become more intense in the future if we don't do that. But right now, we already have intense disasters, and right now, we're not doing everything we can to protect ourselves. It's just that simple.
Help clarify, you know, there have been people talking online about layoffs at these various levels of government, people speculating that maybe DOGE played a role in this because if people lost their jobs, there weren't enough people in the chain of command to alert people of this tragedy. Can you just help us clear up, like, what do we know so far about the potential role that job cutting could have played in this?
Yeah. So it seems like maybe when we're talking about dropping the ball, getting the message from the NWS to the people on the ground, maybe that's where the layoffs had an effect. Again, we're still trying to sort all this out. There are also reports that we've said that these were some of the best staffed NWS offices in the country, but that means they're only, say, 80% staffed as opposed to 50% staffed, you know? So it's kind of a low bar at the moment because a lot of places have really been gutted. So for this particular emergency, we still don't know exactly 100%, you know, how much this affected it. We could say that, you know, the NWS did the best it could, but I think, again, looking to the future, it's these kinds of low staffing circumstances are going to lead to more of these situations where fewer people get warned, more people die, more property is at risk, that sort of thing.
Just 20 seconds. It seems like climate resilience has to be a big part of this. I mean, if you go to Lower Manhattan, you see that there are essentially berms being built on the coast to prevent a storm surge during Sandy from happening again.
Yeah.
Is that the answer?
Resilience is the answer. The problem is you need money, and these states, Kerr County in Texas, didn't have the money to build its sirens. A lot of these places need federal dollars, and the federal government right now is cutting those dollars off, so we need to change that.
Mark Gongloff, he covers climate change for Bloomberg Opinion. Check out his columns and everything from Bloomberg Opinion, OPIN Go, on the Bloomberg terminal, and at Bloomberg.com/opinion. Up next, stocks on the move. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Griffeo. She is in for Carol Masser this afternoon. Carol back tomorrow. And like I said, stocks not really moving so much on the index level. The S&P 500, that's pretty much flat right now. The NASDAQ composite has been moving between gains and losses for much of the day. It is higher right now, just shy of 0.1%. The Dow Jones Industrial Average down 0.3%. Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Emily Griffeo. We're joined by Bloomberg News equities reporter Nora Melinda. Nora, the indexes might not be moving much right now, but kind of hide some big moves taking place if you peel back the layers, no?
Most definitely. And talking of a big move, I'm looking at Fair Isaac, which we all know as FICO. That's ticker FICO. We're seeing shares pointing lower, tumbling double digits actually, as the worst performing stock by a percentage basis in the S&P 500. And this is after Bill Pulte. He, of course, is the Federal Housing Finance Agency director. He said that Fannie Mae and Freddie Mac, which of course we know these are government-sponsored enterprises that are really, really integrated in the mortgage market. They're saying that these lenders, or Fannie and Freddie will now allow lenders rather, to accept the Vantage 4.0 credit model to increase competition in the credit score ecosystem. So what now is currently used, of course, is FICO, which we know that's a compilation of what TransUnion, Equifax, Experian. So Vantage is actually a competitor that's trying to come in, kind of knock FICO out the way. And we're seeing shares of FICO down about as much as 19%. That's its worst day since the pandemic, March 2020. So not a great day for them right now.
And that's ticker FICO. Vantage is a private company.
Correct.
So we can't see those shares move, but
no, we can't.
I guess a good day, most likely, if you're a shareholder.
Most definitely. But I'm also looking at CoreWeave, that's ticker CRWV. And of course, we know this was an IPO back in late March. We've seen shares of the company that have surged more than 280% so far since they IPO. But we're looking at shares that are lower today. They were downgraded to a neutral equivalent rating at both Stifel and Mizuho. And this, of course, is after the company had some news that came out about the fact that it was going to be buying Core Scientific in an all-stock transaction. So the companies, these banks are actually not super enthused about what this means for the shares of CoreWeave. And of course, those investors, Stifel is actually pointing toward pending dilution and potential pressure, especially as we think about some of those multiples and whatnot, as CoreWeave really moves from being a light asset, an asset light company to asset owned or more or less hybrid.
You might think CoreWeave, a company that works in this space, might be based in Silicon Valley or New York or Texas.
But
Livingston, New Jersey.
What?
Yes, which is like a suburb of New York City.
Okay.
That is where the headquarters are.
We have to bring them in here.
Right, they're just down the road, right?
They really are, yeah. I was always surprised to find that CoreWeave is based in Livingston, New Jersey.
The more you know.
Yeah.
And that's ticker CRWV, the second day of losses in a row for that stock.
Most definitely. So we're going to have to see what really happens here in terms of whether or not that pullback extends. But another company, I'm bringing you lots of red today, but another company here, we're looking at Bank of America, that's ticker BAC. And I'm looking at that along with a lot of those peers in the banking space. We know bank earnings kick off next week. But before that, we have HSBC coming in saying that downside risks are not currently factored into the stock prices of a lot of these companies. We've seen a pretty intense rally right now between what things have looked like for the banking sector. And we have Wall Street a bit divided right now. I mean, Mike Mayo saying game on for banks, but then we also have other analysts that are really just flagging what the macro environment looks like for these companies and whether or not that could be a potential headwind for them. But we do have HSBC in particular here turning cautious on the company, as well as JP Morgan and Goldman that were also downgraded.
Speaking of the banks, earnings season kicks off next week.
It does.
The 15th, we hear from JP Morgan. That is, today's the 8th, so that is next Tuesday. Next Wednesday, we'll hear from Bank of America, and then we're off to the races. Yeah. Like, we're going to hear from everyone.
Are we ready?
Oh, I'm ready. I'm always ready for earnings.
Game face is on.
Emily, are you ready? You'll be here. You'll be here in the studio with me.
I'll be here. I'll be waiting for those earnings.
Nora, are you ready? You'll be here in the studio with me.
I'll be watching a lot.
Okay.
I'll be watching a lot.
All right, cool.
Everyone else is like having their European summer.
Yeah,
but
no,
we're here.
We're here.
We're here.
We are
Buckled
here.
in.
Stock movers, Nora Melinda, Bloomberg News equities reporter. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, the S&P 500 is still flat right now, down ever so slightly, less than 0.1%. The NASDAQ in the green, but pretty much flat as well. The Dow, a little bit of movement there, Emily, down 0.3%.
Do you know what's moving, Tim? The
What's moving?
Russell 2000. It's up 0.8%. Those are small cap stocks.
You know what else is moving?
What?
The SOX.
Okay.
The SOX is up more than 2% right now. Got some favorable analyst commentary on chip stocks today from a couple different analysts. So you have a bunch of semiconductor stocks that are outperforming the market.
That's interesting because usually if you see small caps, it's more of like a broadening out type of day. And semis are usually rallying when, tech stocks, mega caps are rallying. So now I guess we're seeing, a little bit of both today, but not on that index level.
Right, that's a good point. Copper also rallying. If you're sticking with us on Bloomberg Business Week Radio, Bloomberg Business Week Daily, continuing on radio on YouTube and Bloomberg Originals, Joe Doe is going to be stopping by. He covers economic statecraft. He's going to be giving us the latest on trade and tariff policy. We'll also be joined a little later by Paige Smith. She covers consumer finance on everything happening with crypto. If you're sticking on TV, the close starts now.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The death toll in Texas is at 109 now from the devastating floods, and there are more demands for answers. Chris Fox reports.
More questions about when local leaders were made aware of the flooding on Friday and what they did. Sheriff Larry Letha.
And we're in the process of trying to put a timeline. That's going to take a little bit of time. As I've told you several times, that is not my priority this time.
With County Judge Rob Kelly not in attendance, Game Warden Ben Baker was asked about the failure to call evacuations.
You have many questions. The judge is not here. We understand that, but right now, this team up here is focused on bringing people home.
Chris Fox for CBS News, Kerrville, Texas.
It's been 4 days since anyone was found alive, but rescuers like volunteer Louis Depp keep going.
We're tired, but running off adrenaline, and it's a very good cause, and trying to find people and bring some closure to those who may not be alive anymore. And so that's kind of where we're at in the search.
President Trump is defending his latest move on tariffs. Linda Kenyon reports from the White House.
President Trump has sent letters to the leaders of several nations saying his 90-day pause on tariffs is ending, and soon countries will have to pay up.
We don't change very much. Every time we put out a statement, they say, you made a change. I didn't make a change. A clarification, maybe. No, August 1st they pay.
Speaking at a cabinet meeting, the president said pharmaceutical companies also will have to pay.
They're going to be tariffed at a very, very high rate, like 200%.
But first, he says they'll be given about a year or a year and a half before those tariffs kick in. Linda Kenyon, CBS News, the White House.
Trump lashed out at Russian President Vladimir Putin.
We get a lot of thrown at us by Putin, for you want to know the truth. He's very nice all the time, but it turns out to be meaningless.
Yesterday, the U.S. resumed military assistance to Ukraine. Someone's been posing as Secretary of State Marco Rubio, as Michael Wallace reports.
We are at the beginning of an era, and we are poised to recover American greatness.
That was the real Marco Rubio in his July 4th message. An imposter has been using AI to impersonate Rubio's voice and writing style. Last month, the person called or texted 3 foreign ministers, a member of Congress, and a U.S. governor through the Signal messaging app. Investigators believe the imposter was trying to gain access to other accounts. The State Department has sent a cable to all diplomatic and consular posts warning staff about the fake Rubio. Michael Wallace, CBS News.
On Wall Street today, stocks are mixed as investors wait for more clarity on the latest tariffs. The Dow Jones Industrials are currently down 138 points. This is CBS News. Lots of people like to watch sports at a local bar, but reality TV, it's a hit too.
The Worthington, a restaurant in Baltimore, has hopped on the reality TV train, and with the help of local influencer Angie Williams,
every piece of juicy drama and gossip,
is packing the place with people who want to watch reality TV shows with others.
Day one, we filled up on a day that we normally wouldn't really have this back area filled.
General Manager Jason Johnson.
We had a lady last week that said, quiet down, boys, this is our Super Bowl.
He says as many people come in to watch a reality TV show as they do to watch a big football game.
It's bringing a new crowd in.
Christopher Cruz, CBS News.
The IRS says pastors who endorse political candidates during services should not risk losing their tax-exempt status. The agency and a Christian media group are asking a Texas court to stop enforcing a 1954 rule. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. We are 1 hour away from the closing bell, and stocks, yeah, well, they're still doing a whole lot of nothing. Charlie Pellet's going to have an update for us in just a minute, but suffice it to say, the NASDAQ composite, it's orange, Emily Graffeo. It's not green, it's not red, it's orange.
Okay, on the print
Did you see
side,
that?
we call it gray. Like if it's unchanged, it turns gray. But
Mine turns orange.
Really?
Yeah.
Oh, I didn't know that. Okay.
I guess we have different terminals
Yeah.
or something.
Well, that's certainly right, though, that the indexes are flat. I will point out that small caps are getting quite a bid today. The Russell 2000 is up almost 1%, broadening out of the rally here.
Okay, let's not forget about those small caps. The voice you hear is not Carol Massar, it's Emily Graffeo, who's in for Carol Massar this afternoon. It is Bloomberg Business Week Daily. We are in the Bloomberg Interactive Brokers studio. We're streaming on YouTube. We're also on Bloomberg Originals. We've got a great program over the next couple of hours.
Yeah, we're going to talk all things tariffs and trade policy, and we have our economic statecraft reporter with the details up soon. We're also going to talk to Mark Gurman with yet another exclusive. Gurman is on fire consistently. Today he's talking about Apple's loss is Meta's gain.
Also, it's day one of Amazon Prime Day. I don't know if you have your calendars marked for this.
No, I feel like it's always Amazon Prime Day.
Thank you for saying that. It's now a 4-day event. At least one early measure, though, says sales are lagging. We're going to check in with our man in Seattle a little later in the program. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. Right now we got Amazon down by 1.6%. You talked about Gurman and Apple. Apple shares right now, they are trading lower by 0.1%. Bottom line here, we've got U.S. stocks trading lower, gray, whatever color you want to choose, orange perhaps. I'm looking at red on my screens with the S&P right now down 3, Trump there of just under 0.1%. NASDAQ, I'm calling that flat on the day right now with the Dow down 141 for the Dow. A drop now of 0.3%. Tariffs front and center today. We've got the 10-year yielding 4.41%, the 2-year 3.9%, 3.90% on the 10-year. Spot gold trading lower by $32 the ounce, down by 1%, and West Texas Intermediate crude up 0.6%, 68.37 a barrel on WTI. Copper surging now by 9.6%. Libby Cantrell is head of public policy at PIMCO. She was a guest on Bloomberg Business Week Daily and says when it comes to tariffs, investors do need to take President Trump at his word.
There's sort of this view in the marketplace that Trump doesn't really mean this. There's sort of this whole taco meme, right? That Trump always chickens out. I think on trade in particular, that has not been the case. If you just look at where the effective tariff rate is right now on all U.S. imports, the average effective tariff rate is around 14%.
PIMCO's Libby Cantrell interviewed right here on Bloomberg Business Week Daily. Boeing says it delivered 60 aircraft in June, its best showing in 18 months. And just getting word from sources at Meta Platforms bought a minority stake in EssilorLuxottica, increasing its financial commitment to the smart glasses industry. Recapping, S&P down 3 now, down just under 0.1%. Copper surging 9.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, cryptocurrency companies, I'll try that again, are rushing to bridge the gap between mainstream finance and digital assets under the Trump administration. From stablecoin company Circle going public to Emily, more and more so-called altcoins being offered in traditional exchange-traded funds.
I know about that.
That's like your thing, right?
That's like my thing.
Do you write about that, altcoins and ETFs?
I do. You know, my editor, I think he pitched this altcoin crypto ETF summer. I'm like, okay, we don't need to make these little.
So I've heard of Brat Summer, and
right.
What is it again? What did you say?
Crypto ETF summer.
It doesn't have the same ring to it. It doesn't
same,
roll off the tongue.
No, it
what
doesn't.
What is the color associated with it? You know, with Brat Summer, there was like the green.
It was like lime green.
Yeah.
I guess crypto would maybe be gold. Okay. I don't know, because it's digital gold. In any way, in the latest moves of this crypto to TradFi bridge the gap closing, payments and stablecoin firm Ripple Labs and also crypto custodian BitGo have applied for national bank charters. Paige Smith, she's the Bloomberg News consumer finance reporter, joins us now in the Bloomberg Interactive Broker Studio. You wrote the story. Maybe we could just start with, what are Ripple Labs and BitGo, and why do they want bank charters?
That is a great question, Emily. And I do think I agree. Let's not try to make Bitcoin or ETF summer happen, but it could be the summer. I campaign for bank charter summer.
Ooh,
because I think that's better, and it's just
sounds
perfectly
wonky.
Nerdy for my kind of beat. But so as you said, BitGo and also Ripple, but there are a number of folks who want bank charters right now. It's fintech firms, it's cryptocurrency companies, it's automakers. This is just to step back for a second. This is not a new phenomenon. There have been companies that have been wanting to be banks that are not traditionally banks for a very long time.
Okay, this is what I don't understand. You've covered fintech companies. You do cover fintech companies. Chime, for example, doesn't want to be a bank, but they want to offer banking services. What's the delta here? What's the difference?
So Chime is different because they make their money off of payments specifically. So every time you swipe your card, they make a fee off of that, and that is, or tap your card, whatever, that is how they make their money. But if you make your money in that way, you have to work with a bank. And if you lend to anyone, you have to work with a bank in order to, Chime cannot officially accept deposits yourself. You have to work with a bank to accept this.
So I thought the reason that these fintechs don't want to be banks is because then they're regulated under a different set of rules also.
That's correct. That's part of it. But if you apply to be a bank, you do have, as Emily said, you have more stability in the financial system. You can do other things that previously you would not have been able to do. And you don't have to rely on that third party. You just have more control over the situation. And it's changing because under the Trump administration, there's actually an appetite to essentially give these bank charters out. Under the Biden administration, that was not the case. There was no forward movement on the regulatory landscape. Even if you wanted to be a bank, your shots of becoming one were slim to none.
So is this about the Trump administration being looser, more friendlier to the crypto industry, or is this bigger than that? This is the Trump administration just wanting to hand out more bank charters at large.
I think it's a little bit early to say. We have seen a heck of a lot of applications. We haven't seen these applications approved just yet. We've seen some approved, but no, there's not enough information, I would say, there's not enough information out there to say, yes, definitely the Trump administration is, totally okay with giving every crypto company that applies a bank charter. That's not the case yet. However, you can look at the other indications from the Trump administration's regulatory agenda to surmise that there's certainly a lighter regulatory touch or a more welcoming approach, if you will, to cryptocurrency firms generally.
In the United States, when you have money in a bank, you have an understanding that this money is protected by the Federal Deposit Insurance Corporation, the FDIC. Could we start to see some sort of guarantees on digital assets as a result of these bank charters?
So it depends on the kind of bank charter that they're applying for. Not to be super nerdy, but I forget exactly which company it was, but one of the firms that have recently applied for a national bank charter, in which case you would also need to apply with the FDIC to get that kind of insurance. That is not the case for all kinds of bank charters. So, you know, some folks may apply for a sort of more narrow bank charter, sort of like an industrial loan charter, as Nissan, for example, is applying for. So it would be from an automaker's perspective, it would more easily allow them to lend or hand out auto loans for their customers. They wouldn't have to work with a, you know, we'll pick on Ally for a second, an auto lender. But in terms of to go back to your original question, for digital assets being essentially guaranteed by the FDIC, I think it's a little bit early to see on that.
What about, I mean, I know it's very early in the stages of this potentially getting approved, but for Ripple and BitGo, for these crypto companies, have they said anything about, like, ideally what they would want to be able to do with the bank charter?
Yes, there are extensive filings that sort of clarify exactly what they want. But again, I think it really is, it's sort of this sense of inertia, right? Like, if they want to do this and this is on their strategy roadmap, now is the time to do it. This process takes time.
What you wrote about and what you've been writing about are these not necessarily digital upstarts at this point, but they're not the incumbents by any means when it comes to digital asset companies or asset managers. We see these companies trying to become more traditional. Are we going to start seeing the big banks become holders of digital assets or start to serve and service this group of clients? We know what Jamie Dimon has said for years about Bitcoin. He's not a fan.
I think that it is early in the stage and it's early in the game, and I wouldn't rule anything out at this moment in time. I mean, if you look at folks expressing interest in stable coins, for example, you've seen big banks express interest, you've seen big retailers, there have been reports of retailers expressing interest. I think there is a lot of runway here of sort of decentralized finance wanting to be more traditional, but also traditional finance wanting to be more decentralized and a little more hip and modern. That's very nerdy, sorry.
Hip and modern banking summer.
There it is. I was waiting for that. Thank you, Emily. Thank you, Paige. Paige Smith,
Thank
Bloomberg News consumer finance reporter. Check out her story and more on the Bloomberg terminal, also at Bloomberg.com. Well, President Trump said he planned to implement a 50% duty on copper imports as part of a set of looming sectoral tariffs, while also indicating he could offer pharmaceutical manufacturers at least a year before applying a crippling 200% tariff on their foreign-made products. We've got Joe Doe with us, economic statecraft reporter for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. Before you covered economic statecraft, you covered metals and mining. And that's where I want to start with you, because we have these global, correct me if I'm wrong, but global minerals companies or copper producers, Freeport-McMoRan, for example, among the best performers in the, among the best performing stocks today, I should say. But these are global companies and they have mines all over, right? So if you put a 50% tariff on copper, then copper you import will be more expensive.
Right.
So it could affect companies that even if they're American companies, if they import it.
Right.
What am I missing here?
No, I mean, this is the debate in the industry, right? So many months ago, Trump said, we're going to do copper tariffs. And it was just like one of 30 things he said in an Oval Office conversation, right? And copper came out of nowhere. That was a big deal because steel and aluminum we did 8 years ago. Copper never hit like that roster. So for it to hit suddenly, that was a big deal in the metals and mining industry because the United States consumes about 1.6 million tons of copper. 850,000 tons of that is domestically produced. So you're still talking about half of your consumption coming from abroad. That's a big question mark for consumers, right? Think about it. Like copper goes into literally everything. I mean, almost literally everything. It is ubiquitous in the United States. It's ubiquitous everywhere in the world. We rely on a major ally for those imports, Chile. 38% of our imports come from Chile. That's a big deal. But they're a great trade partner, right? I mean, maybe the best trade partner in South America. The idea that you're suddenly going to be putting a 50% tariff on those imports is significant because ultimately the consumers are not just you and I. It is the fabricators, right? The people who make copper pipes, copper wiring. They have questions too. And those copper wire producers, for example, might have something to say, saying, "Whoa, hold on, we produce in the United States. We are majorly important. We, in terms of actual revenue, in terms of actual profit, because it's more downstream, that's the ball game." So I don't know how this ultimately plays out. The president said it's a 50% tariff, but what does it actually look like on paper? Do we get 50% across the board? Do we get something that says, well, it's a 50% tariff on raw copper imports and it's a lower percent tariff or a higher percent tariff on copper products? Are there some sort of export controls? These are the questions that the market actually cares about. And I think for your listeners who are saying, Joe's all over the place with this, I can't keep up with it, I think what I'm trying to say to you guys and to anybody who's listening, who's a smart person on Wall Street, it is complex. And to come out and just say, across the board, 50% tariff on copper, doesn't say a whole lot to the people who trade this thing. They still need more detail.
I think this is very helpful to smart people on Wall Street. I don't think you're all over the place. I think you're hitting the nail right on the head. But I mean, when it comes to the companies, like the U.S. copper companies, this is good for those stocks or not necessarily?
To be determined?
Mm-hmm.
Right, back to the point. These copper companies are global.
Mm-hmm.
So Freeport-McMoRan's biggest mine is not in the United States. They do mine here in the United States, but their biggest mine is not here. So yes, on one end, it's a benefit for them, but on the other end, it is potentially harmful. And so you ask yourself, what are the conversations happening inside the C-suite of a place like Freeport-McMoRan or Rio Tinto, where they're saying, okay, great, so this helps our operations in the United States, but we have all of this other production outside. We had many customers inside the United States, and we're trying to figure out how to square away that issue.
How does the supply chain work? Obviously, there's still a lot of uncertainties, but is this a scenario where the tariff ultimately would be likely to get passed down to the consumer if this is a material that is, as you've said, in like literally everything, phones, cars, etc.?
I guess we'll have to see. I think this has always been the issue with even steel and aluminum. How much did the end consumer actually end up paying more for various products? Like we heard way back in the day, in 2018, 2019, people who were buying new windows for their houses, have the window frames are all aluminum. They were paying more for their window frames. But it's not as clear if, like you say, buy an iPhone, right? Like how much copper is in the actual iPhone. I don't have the number off the top of my head. But I think we're going to have to get the actual details of what actually gets put into the Section 232 decision. And then we're going to, if whatever goes into place, we're going to have to see how it actually impacts these downstream consumer products all the way down to wiring in your house.
I want to talk about economic statecraft. And there's a paper from the Hoover Institution about this from H.R. McMaster, who served in the Trump administration, and Andrew Grotto as well. And they write that when a country uses an instrument of economic statecraft, it aims to produce an economic effect within its domestic market or in global markets to achieve a geopolitical objective. Economic statecraft in the context of your beat, I imagine has a lot to do with the United States and what the United States is doing to achieve certain outcomes.
Yeah.
How's it going right now?
It's a tough call, right? I mean, listen, I think it is easy. We've all known Donald Trump for a very long time, and we know the bluster that he puts out into the market and the different things he says. There are things he says that there are a lot of smart people who say, he's actually right. It's just the way he said it maybe is not the way to communicate it, right? But at the same time, there are things that you do that aren't actually good, right? Like these reciprocal tariffs obviously were received very terribly by the United States markets and global markets. And I think we've seen that play out over the past 3 months in the markets. On the other hand, if you look at something like rare earths, critical minerals, what we saw between the United States and China was the negotiation for the trade agreement between the United States and China actually became about rare earth magnets, these permanent magnets that are needed in all sorts of the electrification and EV vehicles and everything else. That is important. And there is a concern among automakers. Ford has come out and said it very publicly. We reported a few weeks ago that quietly many aerospace-related companies are coming out and saying there's concern around this. When they say there's a concern, they're saying we do realize maybe we need more domestic production of these things, of these rare earths and these rare earth magnets. And so in that regard, that's just an example of where maybe Trump is right. Maybe you do need to build out some sort of domestic industry. I'm not saying you just build the industry, you take it all away from China, but like an executive once told me years ago, 5 years ago, you know, Joe, the point isn't you take 50%, you know, China has 80% market share in the world. It's not that next year or 5 years from now you take 50% of that market share. It's you take 1 to 2% market share each and every year, little by little.
Joe Doe, economic statecraft reporter for Bloomberg News, joining us in the Bloomberg Interactive Brokers studio. Check out his work and more on the Bloomberg terminal and at Bloomberg.com. Coming up in just a minute, another exclusive from Mark Gurman of Bloomberg News. This time about a big move from Apple to Meta Platforms. We'll be speaking to him in just a few minutes. In the meantime, we are a little more than a half hour away from the close of U.S. equity trading here in New York. For an update, let's head on over to Charlie Pellet.
Thank you very much. Indeed, 35 minutes to go until that closing bell clangs on Wall Street. We got Apple coming up, down now by 0.3%. We'll have the latest from our Mark Gurman. Right now, the Dow, the S&P, NASDAQ, they are all very much in the red. S&P down 6 now to 62.23, drop of 0.1%. Dow Industrials down 157, down 0.4%. NASDAQ down 12, drop there of 0.1%. 10-year 4.41%, the 2-year 3.90%. Gold now down $32 the ounce, holding just above 3,300, 33.04 on the precious metal, down by 1%. West Texas Intermediate crude up 0.6%, 68.36 a barrel on WTI. And just talking copper with our Joe Doe, right now we've got copper up 9.7%. Tesla shares up right now by 1.4%. The EV maker yesterday fell nearly 7% on the first trading day after CEO Elon Musk announced he's forming a new political party. Today, again, Tesla up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, Apple's top executive in charge of AI models is leaving for Meta Platforms. It's another setback in Apple's struggling AI efforts. Mark Gurman is Bloomberg News managing editor for Global Consumer Tech. He broke the news that Apple's losing its top AI models executive. Mark joins us from the Los Angeles Bureau. Mark, how big of a deal is it that its top AI models executive is leaving for Meta Platforms?
I mean, I think it's a huge deal, right? This is Roming Pang, the most respected AI researcher and AI executive at Apple. He's basically holding everything together there. It's an upward battle where they're developing these models, but they're struggling because they don't have enough GPUs to train the models, right? They have pushback from the software engineering department. They also have this privacy stance, which means their models can't be as effective as the models that you're seeing from ChatGPT, you're seeing from Anthropic with Claude, you're seeing from Google Gemini. Now at Meta, right, the gloves are off. He's going to be able to develop models and train them to the extent that he wants to be able to mitigate the privacy concerns to the extent that he wants to, along with everyone else they're hiring for Meta for superintelligence. And so this is a big setback for Apple. Internally, they claim they have a deep bench behind Pang in order to fill that gap, but the reality is they really don't. And the other reality is I'm told a bunch of these people are probably going to follow him out the door to Meta, OpenAI, Anthropic, and others. Apple pays measly amounts compared to the competition. I would guess that Pang was making around $5 to $7 million a year at Apple in his position running the foundation models team. At Meta, probably making well north of $25 to $50 million per year. I'm told his pay package is probably somewhere north of $200 million over 4 to 5 year contract. And so Apple not in a great space right now when it comes to AI research.
Wow. Okay, so I was going to ask you about compensation, but you answered the question. You should see Emily's face and my face when you said measly $5 to $7 million a year, because I think for a lot of people that sounds like quite a bit of money, but we're talking about an AI arms race where we've seen reporting, Mark, that shows that Meta Platforms is offering $100 million signing bonuses plus annual compensation of $100 million. This is unprecedented.
When I said measly about the $5 to $7 million, I was referring to your point, in comparison to what you're seeing in terms of those offers. I don't think that's.
I don't know how things work out in Los Angeles, Mark. Okay.
Yeah, I was comparing to Meta.
Okay, good. Go ahead, Emily.
Well, Mark, so you reported last week that Apple is considering using AI from potentially Anthropic or OpenAI to power Siri. So how much of that is going on in this executive departure? Is it essentially Apple just saying they're kind of seeding in this AI arms race? I mean, do they really need the top talent if they're going to make all these plans to outsource a lot of their AI operations?
It's no coincidence that Peng is leaving a week after I broke the news about this change. He runs the team that Apple is seriously considering demoting or replacing. He runs the team that Apple's top executives have essentially blamed for the mediocre performance of Siri and the LLM technology as part of Apple Intelligence. Obviously, one team believes this, another team believes that. The truth probably lies somewhere in the middle. And he's running that team. He gets an offer worth, I don't know, 10x what he gets paid at Apple, right? His team's being blamed, and he's being offered 10x more money. How could you stay in that situation? You know, what Mark Zuckerberg is doing is making job offers to people that even if you don't want to work at Meta, you would be foolish not to take the money, right? I mean, they're offering generational wealth for your entire family tree for the next 300 years, potentially. You can't really say no to that, even if you don't want to work there. So he's putting people in those types of positions.
What is Meta going to do? Like, what are they trying to build here that is worth all this money?
Well, they're trying to get to AGI, right? They're trying to get to a point where the AI tools are even smarter than a human, right? And with this amount of money that they're throwing at the problem, they're probably going to end up being a big winner here, right? I think that on one hand, it's a completely ineffective solution from a cultural standpoint of building a team where you're getting people solely because of how much you're paying them rather than people who genuinely want to be there and work together, right? On the other hand, if you get the right people and you actually get them to work together effectively, you're probably going to end up with a winner here if you bring all the best minds together. So I definitely think that OpenAI and Google and Apple's not even in the AI conversation at this point, as far as I'm concerned, really should have some concerns regarding Meta's standpoint right now.
I think people don't necessarily understand the opportunity AGI presents. You know, they know that Meta Platforms is a company that still makes the vast majority, I mean, close to, you know, in the 90% we're talking about here, of the money that it makes from selling ads, targeted ads to us on Instagram and on Facebook and WhatsApp and increasingly WhatsApp at this point. What is the market opportunity for Meta Platforms to achieve AGI? Like, how is that going to make this company even more trillions of dollars?
I mean, this could add, if they get to AGI first, and you think of everything they can do with that, I mean, this could add $5 to $10 trillion to their market cap easily. It could become the most valuable company in the world. The advantage of Mark Zuckerberg in the voting and share control he has over Meta as one of the co-founders and being the CEO and basically owning the board there is he can do whatever he wants. Shareholders are not necessarily going to push back, and it's not a shareholder-owned company like you see like an Apple, like a Google, right? This is a company where he can make the decisions, and if he wants to throw tens and hundreds of billions of dollars at this problem, he wants to throw $100, $200 million pay packages to bring in whoever he wants, he can do that. So he does have that inherent advantage to do whatever he so chooses.
Mark, who are the names that we watch next? Now with Peng out, who is in charge? And can you maybe share with us who you're potentially watching next to be leaving Apple?
I mean, for Apple, the AI work has now been spread amongst the company. They had an AI chief named John Giannandrea. He ran AI at Google till 2018 when Apple brought him over, and he's been extensively demoted over the last several months. They removed Siri from his command. They removed robotics from his command, a series of AI-related frameworks called CoreML and App Intense, and a bunch of other AI-related things. He essentially runs research for AI at Apple and some annotation and analytics and testing teams related to Siri and artificial intelligence. At some point, he's no longer going to be there. That's the name that a lot of AI industry people have been watching. And obviously, a lot of the other researchers who reported to Peng clearly probably on the way out as well.
Mark, these are wild times. I mean, I think it's fair to say unprecedented in terms of compensation. I think a lot of people are saying, is this money, going to amount to something? And we'll certainly have to wait and see. In the meantime, thank you as always for joining us, Mark Gurman. He is Bloomberg News managing editor for global consumer technology. Once again, he broke the news that Apple is losing its top AI models executive as companies battle it out for dominance in AI. Check out Mark's reporting and more on the Bloomberg terminal, and give Mark a follow on the social media platforms. He's on them all. You should also subscribe to his newsletter. Comes every weekend, Power On with Mark Gurman. Coming up next on Bloomberg Business Week Daily, we are driving to the close on a day where stocks overall are kind of doing nothing. This is Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all trading in the red. 30 minutes to go, actually 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a choppy session today. The Dow's currently down 149 points. The S&Ps are down 5, and NASDAQ is lower by 10. The U.S. 10-year yield is at 4.41%. Gold is in the red, oil is in the green, but Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, leaders were energy and materials, consumer staples and financials were under pressure, and leaders to the upside in the Dow, Chevron and 3M, while Nike fell 3.5% and led to the downside. Among the banks, the Kuwaiti Sovereign Fund is set to sell its $3.1 billion stake in Bank of America. And in other news, SpaceX valuation is set to hit around $400 billion. Wrapping things up, Trump said the August 1st tariff deadline will not be extended. Live from the first to breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. One additional headline out of Washington. The U.S. Supreme Court is letting President Trump proceed with sweeping workforce cuts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Look at that. Stocks in the red, but not by much. We've got less than 20 minutes to go until the close of equity trading here in New York City. The S&P 500 down 0.1%. The NASDAQ down, we can go ahead and round that down to 0.1%. The Dow down 0.3%. We've got with us back in the Bloomberg Interactive Brokers studio, Chris Bergotti, Chief Investment Officer at SWBC. They manage more than $1 billion. Chris, good to have you with us. You were last with us in March before the April 2nd so-called Liberation Day, before the pause, a little more than a week later, of those tariffs, before what we heard just recently, which was the extension to August 1st, so that July 9th deadline would not hit tomorrow for many of these countries. A lot has changed in the last few months. Have your picks changed in the last few months? Where you find opportunities?
A little bit. You know, I'm a little bit more thoughtful about some of the downside risk. We've had a new high in the S&P, for example. We've made repeated new highs of late. I'm thoughtful of the fact that the European market has really outperformed. So there might be a little bit of room to cut back or be more thoughtful about the value picks in Europe as well. But generally speaking, there's a lot of good positive momentum for the overall market. And some of the tech things are going to still kind of ride the wave and really do well.
I want to talk about individual stock picks, but I first have to get your thoughts on just kind of like reflecting on the market action that we've seen since Liberation Day, because the S&P 500 is up almost 25% since April 8th. And a lot of the tariffs that we're seeing now are pretty similar to what we saw back then. So why has the market rallied so much and now not reacted? Is it all, I guess, priced in? Are investors shrugging off what they previously were very panicked about?
It's kind of funny. We were talking about this earlier in discussing the fact that the market is kind of underreacting to negative news along the lines of the tariffs, for example, and almost overreacting to positive news and kind of shooting up. That's why we keep seeing these new highs. So the net effect is that the opportunity has made it very volatile. Volatility creates opportunity, but the markets generally don't like uncertainty. So we have all these kind of things coming together at the same time, and we're trying to dig through all of that and figure out where the opportunity lies. The net result I'm seeing is the fact that investors should not overreact to any change either way. Don't dump out of bonds because you're concerned about the market. Don't overindulge and extend into things that might be riding too high of a wave, because eventually there could be a correction. And I'm very thoughtful of that down the road and wary of when that could happen.
The president has vowed to push forward with his aggressive tariff regime. He stressed he would not offer additional extensions on country-specific levies set to hit in early August. Essentially, he's saying August 1st, that is the deadline. It will not be extended. Do you believe it?
I do believe that one. I put a little faith in this because he's so adamant about it. So I do expect there to be an imposition of the tariffs. I do expect it to be a little harder of a line. I thought that the 90-day deadline was aspirational.
90 deals in 90 days. You didn't see that happening?
Didn't see that happening. I mean, it's so complicated. All the minutia, the details, not to mention the number of little offsetting type of tariff situations that you could become aware of in terms of, well, we need to import more steel. We need to export more electronics. There's so many different things that can really be offsetting and deals could be made around. So I think that's where a lot of the holdup can come. So I do expect there to be a little bit more progress as we move into tomorrow. I expect some of these deadlines to be a little bit harder to meet for some of the trade partners in terms of getting us something that Trump will be satisfied with. So I do expect the imposition of these tariffs to hit on August 1st to some degree. Now, he could say, well, I'm going to dial back the tariff, but he will have something on August 1st, I believe.
What is your outlook for investing in European stocks? Because that outperformance gap has shrunk.
Correct.
If you look at what the S&P 500 has done year to date, it's about up 6%. Europe is about up maybe 7.5%, where it previously was outperforming a lot more.
It was. If you include the currency into the play, though, the currency play has added a little bit more than that. So you're getting almost 14-15% if you add the currency factor into some of the European plays.
That's pretty good.
But to your point, I'm a little more cautious on Europe, a little bit more thoughtful about where is their value in Europe as opposed to kitchen sink investing, buy an index and you're going to be better off. Now I'm more thoughtful about what industries can outperform, what can do really well. And some of my thoughts are along the lines of the defense industry with the geopolitics that kind of have become a little bit more aware of late, have really kind of spurred some of the investments in the defense industries in Europe, as well as banking. I think the banking industry, we've seen rate cuts in Europe that we have not yet seen in the U.S. that has helped outperform some of the banking sector. And look at some Barclays, for example, Deutsche Bank, really good investment opportunities, I think, going forward.
PNC was one of your picks last time you were on with us. Still on your radar?
Still on the radar. Hasn't done as well as I would have thought, but I think the opportunity set is still down the road. We haven't had those rate cuts in the U.S. yet. So they were also a pick simply because of the fact that they've got some opportunity to expand into the Sun Belt, Southeast and Texas area, which really, we've seen a lot of influx of people and they're going to need more banking.
What about Nestle?
Nestle, I'm really disappointed that it kind of came back and corrected. When we spoke, it was really what rode a wave, and it really performed very, very well. Now it's come back a little bit. I do still think it's got some benefits, especially with the Trump tariff situation that can ride through, and it's such a geo-national type of provider, I should say, of goods and services. It should do fairly well, but I'm a little less high on it as I was before.
What about energy stocks? Because you had picked Entergy,
Yes.
ENT, back in March. Is it different now, given the big, beautiful bill and what that means for energy?
No, because the thing with energy specifically is the fact that, one, they have a pretty solid dividend. Overall, that's going to be a constructive thing, and any corrective pullback, utilities are a defensive type of sector, generally speaking, should a pullback occur. The other factor is that they're really well positioned in an area where Meta is putting in more AI. We're going to need more and more energy to support the AI initiative that is continuing to expand throughout the U.S. and the globe, really. So where Meta is putting in some new factories, some new buildings, some new warehouses for their technology, they're going to need the energy to produce, and that's happening in the area that energy is very strongly present in.
Where do you not want to be?
Some of the things that I'm really a little bit more concerned about are things that are a little bit more high-flying. I think you can have some pullback in some of the tech stuff. NVIDIA has done really, really well, continues to outperform, continues to perform really well. I wouldn't say I'm negative on it. It might be time to pare back a little bit, because what people tend to do is they keep riding that wave, and eventually you get to a really big correction and you give up a lot of the gains you might have had. So it's a matter of rebalancing portfolio. So I'm more thoughtful about a rebalancing situation with some of the higher tech flyers.
All right, Chris, good to see you.
Likewise.
Thanks for joining us today.
Thank you.
Appreciate it. That's Chris Brigatti, Chief Investment Officer at SWBC. Those were some of his stock picks, at least back in March, how he's looking at them now as well. As far as stocks look right now, they're not doing a whole lot of anything, Emily.
They're not doing a whole lot of anything. The fixed income market not moving as much as well. We are seeing a little bit of movement in the longer end of the curve with yields higher, but on the shorter end, the 2-year is basically unchanged as well. What are people waiting for? Maybe that tariff deadline tomorrow, Tim.
We're also getting other headlines. The U.S. Supreme Court has let President Trump move ahead with plans to dramatically reduce the size of the federal government, lifting a court order that had blocked 19 federal departments and agencies from slashing their workforces. Granting a Trump request over one dissent, the justices on Tuesday cleared the administration to implement Trump's February 11th executive order, which opponents say could cause hundreds of thousands of federal workers to lose their jobs. Coming up next, we drive to the close. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Griffeo in for Carol Nasser this afternoon. As I mentioned, well, actually, I think I said coming up next, it's Drive to the Close. I was a little confused. It's our cross-platform coverage.
Right. We
coming
just
up next.
we
did drive to the close. Yeah. So
Well,
apologies if
someone
folks
was
out there are
very
confused.
They're waiting for that music.
They are. Well, they better wait for tomorrow. Did you see or did you hear President Trump talk about Jay Powell today?
No. So he was in a cabinet meeting?
Yep.
Where was he? Or in a social media post?
This is a cabinet meeting today.
Okay.
We were doing Bloomberg Crypto on TV,
Mm-hmm.
and we decided when he started talking about Powell to go over to him.
Mhm.
And he had just made these comments. He said Jerome Powell should, quote, resign immediately if allegations from an administration official that the Federal Reserve Chair misled lawmakers prove true while deepening his personal attacks against the head of the central bank over interest rate policy.
He called Powell, quote, terrible, and told reporters that if allegations he deceived Congress over renovations to the Federal Reserve's headquarters proved true, it would be grounds for a swift exit. Trump really wants Powell. Is it about him wanting Powell to leave, you think, or it's really just about Trump wanting to get somebody else in there to cut rates, like someone who's going to just do whatever Trump says and cut rates? That's not really the role of the Fed chair, though. They're not. Their role is not to listen to the president.
Look,
So,
you read my mind, and they also don't act unilaterally. So just because the Fed chair wants to do something, let's
Right.
say a Fed chair was in there who wanted to cut rates, if the voting members didn't agree, that wouldn't necessarily be the case.
this is what I would tell Trump. Do we need to cut rates so urgently? We've already had a couple cuts. The Fed, markets are expecting a couple cuts this year. Like, even if we won't get one in July, we could still see them this year. The market is up. GDP is looking pretty good. Job market is healthy. Why do we so urgently need the cut? But I don't know.
I also think the Federal Reserve only has so much control. You see what the bond market does when it does or does not agree with a decision, not necessarily from the central bank, but we saw, in the words of the president himself, the bond market get a bit yippy back in April over concerns over his tariff policy, and reporting indicated that that indeed helped the president come to the conclusion that he should put that 90-day pause on those April 2nd tariffs. So I don't know. I think, look, this is not any different than what he said about Jay Powell resigning in the past few months. A reminder that he was the person who did appoint the Federal Reserve Chair during his first administration, and then he was up again during the Biden administration. President Biden at the time reappointed him, and he was confirmed by Congress. You did mention a social media post. The president did come out with a subsequent social media post. He accused the Fed chair of whining like a baby about non-existent inflation for months and refusing to do the right thing. Cut interest rates, Jerome. Now is the time.
And that was in all caps. I don't know. I have to admit, I don't know much about the Federal Reserve headquarter renovations. Our Bloomberg News writers have written that some media reports have asserted that the Fed's renovation of its headquarters has seen swelling costs and includes several extravagant features. And Fed budget documents for 2023 did attribute rising renovation costs to increases in raw materials. So the Fed is also not immune to, of course, rising inflation and commodity prices rising. So maybe that's why it was more expensive, but we'll have to tune back in.
Hey, just wanted to bring everybody a headline that we got in the last few minutes. The Supreme Court has let the president proceed with a broad workforce cut. The U.S. Supreme Court let President Donald Trump move ahead with plans to dramatically reduce the size of the federal government, lifting a court order that had blocked 19 federal departments and agencies from slashing their workforces. Granting a Trump request over one dissent, the justices on Tuesday cleared the administration to implement Trump's February 11th executive order, which opponents say could cause hundreds of thousands of federal workers to lose their jobs. More coverage on Bloomberg.com and the terminal. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Sonali Basak here to take you through that closing bell with the global simulcast. It has already started. There's Tim Stenovic in the radio booth, Emily Grafeo in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms. An unchanged day on the S&P 500, Tim Stenovic, but a little bit more activity in the small and mid-cap space.
Yeah, Emily's been talking about the Russell 2000 all day today. We are seeing some activity there. I think investors still have a lot of questions about tariff policy. I've been asking our guests throughout the day today, are these letters providing more clarity? And one after one, people are saying not necessarily.
You know, it's funny. I wanted to look at the Russell year to date, and the little bit of a bid you're getting today brings you to almost flat. Now, isn't that a fascinating stat?
Also in the commodity space, there has been some movement. Look at copper prices, up over 9% right now. Of course, coming after that tariff news from Trump, potentially a 50% tariff on copper.
Yeah, and of course, I mean, the tariff news, I mean, we did see a big downdraft in stocks when we started to get some of those headlines. Some of that coming, of course, first from his social media site and then later at that cabinet meeting. And it really is just a reminder, Tim, of this idea that the tariff issue is far from resolved and still potentially poses a risk to the markets.
Yeah, I mean, I think that's what, you know, the big question people have is what does the August 1st deadline think? I mean, we speak to folks every day who basically say, well, he hasn't necessarily followed through on these tariff promises. And we just spoke to Chris Brigatti over at SWBC, and he was like, this is one he's not going to extend. August 1st that is actually going to mean something.
And if you listen to his comments at that cabinet meeting, and I actually really encourage people to go back and listen to it. A lot of rambling, but in between that, he did make some very salient points about his philosophy on tariffs and trades, of course, hearkening back to President McKinley, and in his view, how that tariff situation, in his view, worked out. Let's take a look at the numbers across the board. Not a whole lot of action there with the S&P and NASDAQ. We're just going to call it unchanged. The S&P does have a red arrow, but only down about 4 points. The NASDAQ does have a green arrow, but only up about 6 points. The Dow Jones Industrial Average decidedly in the red, down more than 160 points or 0.4%. And the Russell 2000 decidedly in the green, up 14 points or 0.7%.
Still did have 269 stocks in the S&P 500 move higher today, whereas 231 moved lower.
Let's look at the sectors as well, because even though the sectors here show you a little bit of red on the screen, obviously it was enough to drag down the broader index here. You did have consumer staples, which was yesterday's gainer, and the relative safety trade in the market down more than 1% on the day. Utilities and financials also lower by almost 1% or more. Energy was your gainer. You had it up about 2.7% on the day. So very, very mixed trade, even though you had an index that showed roughly flat.
All right, let's get to some of the gainers today. I want to start with semiconductor stocks. I just went and chose the entire SOX, the Philadelphia Stock Exchange Semiconductor Index. We saw shares of semis rise today. The group outperformed as analysts expressed optimism about the group's prospects. Mizuho Securities raised its price targets on a number of chip makers. KeyBank Capital Markets also raised targets on a number of chip makers. If you look at the SOX right now, of the 30 stocks in there, 27 of them were higher, 3 of them were lower. Intel up 7.2%, Global Foundries up 7%. On the downside, Broadcom did fall 0.9%. Also, Emily mentioned copper stocks. I want to go with Freeport-McMoRan. The shares jumped as much as 8.8% earlier in the session. They moved lower after that Trump announcement at the cabinet meeting to finish the day finish the day higher rather by over 2%. This after President Trump said he would impose 50% tariffs on copper.
Did you know there are people who collect like old pennies, you know, the ones that actually still had copper in them because they were anticipating a big jump in copper prices?
You know, it's funny you say that. I did not know that.
Okay.
But I did learn something about coins today, and I'm glad you brought this up.
What's that?
Charlie Pellet told me that in the U.S., we do not have the actual number of cents that a coin is worth on that coin. Like a dime doesn't say 10.
That blows my mind.
A quarter doesn't say 25.
And I don't know why, but it blows my mind.
Hey, you know what? We're a little different.
Yeah,
we're a little different.
We are America.
We are. Hey, I want to end with a stock that really had some serious outperformance today. ProKidney shares soared the most ever. Look at this, up more than 500%. Isn't this wild?
I've never heard of this.
It's a drug developer. It gave top-line results from a mid-stage trial of its experimental therapy to treat kidney disease. The company reported statistically significant and clinically meaningful positive top-line results from a full Group 1 modified intent-to-treat population of a Phase 2 trial. And it was good news, and investors loved it. Look at this, up more than 500%, ticker PROK.
That is incredible, Tim. Let's go to the decliners, though. FICO, Fair Isaac, but known colloquially as FICO, fell 9% today after federal regulators said government-sponsored mortgage entities Fannie Mae and Freddie Mac will be able to use an additional firm when determining borrowers' creditworthiness. So they were using FICO. Now Fannie and Freddie will allow lenders to use Vantage 4.0, their credit score, to increase competition in the credit score ecosystem, at least according to what the regulators had to say. Vantage is a private company, so we couldn't see how the shares performed, but we did know that this was weighing heavily on FICO. I'm also watching shares of Hershey, down 3% closing the day. Yeah, down about 3.2% after some management changes. The snack food company named Wendy's CEO Kirk Tanner as its CEO, replacing Michelle Buck, This is going to be effective August 18th. The reason why the street was so negative on this is that Hershey announced back in January that Buck would be retiring in June of 2026. And so the timing of the appointment is somewhat surprising, and the transition was almost a year early. So shareholders didn't like that. So we saw that stock falling. And then finally, First Solar. It's been a wild ride here for these solar stocks. Today we saw First Solar down, closing the day about 6.5% lower after President Donald Trump called for new rules that would restrict access to tax incentives for solar and wind projects that were already pared back in that big, beautiful bill.
Some of the big individual movers there when we talk about the aggregate market and the lack of movement that we saw in the S&P 500, I'll one-up you and take a look at the bond market. Treasuries basically doing nothing today. Yields are higher across the board, but only by about 1 to 2 basis points as you pick your point on the curve here. So a little bit of stasis, and we should point out most of the activity in the Treasury market actually came during the European hours here, so it's basically been stasis for the last couple of hours here on the U.S. side. Tim?
I got a little bit of a New York-centric story here, but there's a little technology in it as well.
Does it involve rats?
It doesn't.
No.
No, New York City is one of the biggest ride-hailing markets in the United States. And now, if you're in New York, you might start seeing Google's Waymo vehicles driving around because they're starting to test them here.
Oh, yeah?
But they have people behind the wheel. They're just gathering data.
Yeah.
The company sent out a social media post. They said, be sure to give us a wave and snap a pic if you see us in the city.
That's what they said? Okay.
And you're not just giving the Waymo a wave. You're giving the person sitting in the driver's seat a wave as well.
Do they know we don't give waves here?
Yeah, I'm about to say, I mean, they're going to get a wave, but I don't think it's the wave that they're looking for.
Exactly.
So as somebody that drives daily in New York City, the problem is actually not the cars, right? Like, there's so many people.
It's the drivers?
And the people, right?
Okay.
I mean, jaywalking is a real thing in New York City. So it's a really interesting city to be trying this in. There are a lot of bikers, as you say, too. So again, I drive every morning in the city.
Can't trust those guys.
It's a lot to handle for a driverless car out there.
Yeah, I'm actually looking forward to this. I think anything possibly to improve traffic in this city, I'm definitely all for. I'm also keeping an eye on gold, Timothy. We were just talking about copper. But did you know that Tether, this is the big stablecoin issuer, basically one of the two big publicly traded ones out there, apparently they've been hoarding $8 billion worth of gold in a secret Swiss vault. And I'm glad it's secret, because if it was public, that would be trouble. But it really gets to this idea. This story really captured my attention because there's been all this talk about stable coins, of course, with Circle recently going public. And the idea that you can't have a stable coin unless it's, actually backed by real assets, presumably dollars, or maybe in this case, something that can be converted into dollars like gold.
But doesn't this answer a lot of questions about what was backing Tether or what is backing Tether?
Yes.
Hasn't that been a big concern?
It's been a huge concern for a while. And I think it's also when you look up the run-up that we've seen in gold prices, remember there was a big period where it just didn't make sense, economic sense, as to why you were seeing such a surge. And maybe this helps to start explain. And it might not just be Tether. There might be a lot of other folks out there that have been doing the same thing.
You know, what happens then to the price or how much that stable coin is worth if the price of whatever asset you have underlying it declines?
That's a good question. I don't know. Don't you host a crypto show?
I do. I was asking Shonali because she hosted with me.
Right. We've seen depegging, but just another fun fact to leave in your minds, guys. Tether itself was the 7th largest buyer of U.S. Treasuries last year, even ahead of most major countries. And so safety, perhaps in gold as well as treasuries.
I have a question though. If I buy a stable coin, does it say on the coin how much it's worth?
There's no stable coin. Oh gosh.
There it is.
That's a joke.
Tremaine always brings it back.
That was good.
All right, we're going to have to leave it there. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll all be back tomorrow, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Emily Grafeo. I'm Tim Stenivek. Emily in for Carol Masser this afternoon. Happy Prime Day.
Yeah.
Do people say that?
I don't know. I think we're kind of grasping for straws here. But yeah, I guess happy Prime Day.
I don't know. Happy Prime Days. Here's an interesting stat. Ed Harrison passing this along to us. Remember what he said yesterday about Prime Day sales? Watch them closely. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale. This is according to Momentum Commerce. It manages 50 brands in a variety of product categories. Merchants and analysts alike are watching the sale closely for clues to the strength of the U.S. economy, as well as consumer sentiment. Also watching the sale closely, Bloomberg News technology and e-commerce reporter Spencer Soper. He joins us from our Seattle bureau. I like to call him our man in Seattle who covers Amazon and all things e-commerce. Spencer, is it fair for us to read into these first 4 hours, at least according to the data from Momentum Commerce?
Not really, because but we did anyway. Okay. Because it's a 4-day event this year, as opposed to 2 days. So it's still interesting to see that out of the gate it was soft, but they've spread this over 4 days now. So the question is there less of a sense of urgency among shoppers, like, oh, that's a good deal, I better buy it now before we run out of time? And has that been replaced with more of like a treasure hunting? Oh, let me put this in my cart and come back later and see if there's something better, that sort of thing. There might be a little bit more of a laissez-faire attitude toward the deals this time because it's 4 days.
Why is it 4 days? And then additionally, Tim and I were talking, and we feel like it's always Prime Day. Maybe that's because now there's more than 1 day, but it feels like it's always Prime Day. Is that a coincidence? Are we going crazy and we're in this endless loop?
Yeah, I think you've just given us a window into the void in your lives if every day is Prime Day. But it's a fair point, right? Amazon's got these sales all through the year now, pretty much like quarterly, catered around different things. But this is still the original Prime Day that they launched in 2015 to try to get sell more Prime memberships and retain existing Prime members and offer them something. But yeah, there is some fatigue here. And in response to your question about why is it 4 instead of 2, it started as just 1, it grew to 2, and now they're going for 4. Competitors like Walmart has like a 6-day deal that kind of overlaps with this. Target has a week-long deal. So it just seems like they're trying to stretch it out a little more, maybe thinking that they're losing sales on these other non-deal days when competitors are offering deals.
Spencer, you also wrote a story today, published early this morning, about how Prime Day is slamming into President Trump's trade war. Ever-shifting tariffs are prompting some brands to sit out the summer sale and some shoppers to drop hints that they plan to pull back. How have tariffs affected what's sold on Amazon?
Yeah, well, you just think about how, tariffs, they're here, they're there, they're everywhere, they're on again, they're off again. It just made planning nearly impossible. And so if you're a brand and you're heading into what might be a soft, holiday season, do you want to unload inventory now that's already in the country at a lower tariff price point? Or do you want to hang on to that stuff a little longer and sell it for a higher price and maybe protect your margins? So those are the deliberations that a lot of brands are doing now. And you're also seeing that the shopper appetite, shoppers are inflation battered. And I think we saw a survey that 1 in 4 shoppers were just going to skip Prime Day, not even really look. Is that people are buying like groceries and essentials. It's like, all right, let me just stock up on the stuff that I need if I can get a good deal, but I'm not really shopping for a big ticket item.
Libby Cantrell from PIMCO on our air earlier today reminded us that at the start of the year, tariffs, the baseline tariff rate across products in the U.S. had an average of 3%. Now it's up to around 14, 15%. Kind of changes all the time. Have we actually seen prices go up on Amazon products that are imported to the U.S.?
Amazon said they haven't noticed any appreciable price increase. And yeah, then that's another thing is we haven't really seen price increases. But when you talk about brands planning for a big event like this, for them they're thinking, okay, you know what, I'm looking at probably having to gradually ratchet up my price on this, $35 item to $45 to offset the tariffs. Do I really want to discount it to $30 when I'm about to do that? So a lot of them are just sitting out because of this tariff uncertainty and not knowing precisely where prices are going, even if we haven't seen a sharp rise as of yet.
Spencer, I don't know where you found the people that you interviewed in your story, because this is such a niche product, but I love it. And I want you to tell us about this Amazon seller who you interviewed who makes decorative ice cubes. Or no. They sell aluminum trays that make decorative ice cubes for a cocktail connoisseur. But it sounds like this is giving us a window into how brands are reacting to tariffs. So maybe you could walk us through this very niche.
Yeah,
product.
this is a really good example of how a business might think. And this is a small business. They're trying to find a niche. This would be like a nice Father's Day gift or something. It's an aluminum tray that'll carve like squiggly lines or different patterns into an ice cube. So it's a nice. It could be like a nice gift if someone is really into their bar, into making cocktails. And it's made of aluminum, so it's subject to these 50% tariffs. And, you know, ordinarily, he's been selling on Amazon for years, and ordinarily he will sell his products at price just to try to, you know, almost as a marketing campaign, you know, so he'll sell them at cost to try to generate some awareness. He's just saying, I can't afford to do that this year. He's looking at raising the price of his product about $10. He's like, I'm not gonna try to discount it when I'm, you know, 2 days later, I'm gonna have to turn around and raise the price.
How important is Prime Day to Amazon these days? You know, I'll remind everybody that the profits that Amazon makes are still at AWS, right, Spencer?
Yeah, most of the profit comes from AWS, but Amazon Prime Day is still an important day, and now it's just kind of cooked in. I mean, every year they've got to meet last year's threshold or do a little better to keep the top line growing. So it's a very important thing. But the main thing is about Prime memberships, because that's where people who pay $140 a year for Prime membership, and they have very good penetration in the U.S. population with that. Those people spend, you know, somewhere like 2 times more on Amazon through the year than non-Prime shoppers. So a lot of this is about attracting those new Prime members and retaining the existing ones by offering them some exclusivity around this deal.
How is Walmart doing in competing with Prime, and how's Target doing?
Walmart's doing better than Target, and Walmart definitely gets the grocery spend, shoppers' grocery spend, and that's something that people are really focused on. You got to eat. You know, you don't necessarily need the ice cube tray. So Walmart's doing quite good, and also has its own, competing membership program with Walmart Plus. And so that comes in at a lower price point than Amazon Prime, and they also offer free grocery delivery, which Amazon doesn't offer in a lot of areas. But you're also starting to see this kind of geographic distinctions between Walmart country and Amazon country, largely centered around where Walmart stores are.
When we get some information from Amazon, will we get a good window into how consumers are doing? Like, how do they typically communicate how well Prime Day is going?
We won't get much of an indication at all. They like to say like record breaking. They'll find some record that they broke, and they'll like tell us how many Instapots sold per hour or some kind of metric like that. That's kind of like funny to talk about, but they don't really give the clearest indication of how the day went overall.
Yeah, I remember covering Amazon years ago, and we'd get these like charts or graphs from them that it would have no labels on the y-axis, so you would really never know, like, you know, how much it was selling of a certain thing. But I'm kind of dating myself there. Spencer Soper, always good to see you. Thanks so much for hanging out with us this afternoon. That's Bloomberg News technology and e-commerce reporter Spencer Soper. He covers Amazon and more from our Seattle bureau. Coming up next on Bloomberg Business Week Daily, we are talking about small business with the head of GoDaddy Independence. That's next on Bloomberg Business Week.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P lower, NASDAQ higher today. Copper surges. And this Bloomberg Business Flash brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. S&P 500 index today did decline 4 points, ending the session 62.25. A choppy day with the S&P ending lower by less than 0.1%. We'll call that a little changed on the day. The Dow down 165, down 0.4%. NASDAQ up 5 points, also little changed. 10-year 4.39%. The 2-year 3.89%. Spot gold down $33 the ounce, down 1%, holding just above 3,300, 33.03. West Texas Intermediate crude up 0.5%, 68.32 a barrel on WTI. Big news in the commodity space elsewhere, with copper surging today by 9.3%. Again, recapping here, stocks lower, S&P down 4, drop there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Small and medium-sized businesses help power this economy. According to the U.S. Chamber of Commerce, small businesses in the U.S. are responsible for providing employment for half of the American workforce, and they represent more than 43% of the GDP of the U.S.
It's really inspiring.
It's huge.
Tim. Yeah. People come out, they have a small business, they have an idea, and they scale it. We see it a lot in the ETF world. So
increasingly, what they're doing these days is they're doing it online. And that's where Gaurav Pani comes in. He's president of independence at GoDaddy. A reminder, GoDaddy provides a broad range of online services for small and mid-sized businesses. Think internet domains, website hosting, and more. The company's got a market cap of around $25 billion and serves more than 20 million customers around the world. Gaurav joins us from Seattle. Good to have you on the program today. President of Independence at GoDaddy. Can you explain what the independence portion of GoDaddy is?
Thank you for having me here, Emily and Tim, representing GoDaddy. Independents are businesses that make up to $1 million a year in revenue. They are the hyper long tail of small businesses in this country. But it's remarkable to see how resilient they are and how successful they have been by just demonstrating their tenacity.
So how are they doing in the U.S. right now? I understand it's a global company. You serve customers around the world. But we're constantly trying to use alternative data, get anecdotes from people such as yourself about how companies are weathering what's happening right now.
Look, this is a shopping moment right now that we're going through that is no different than Black Friday or Cyber Monday. And these micro businesses have become very innovative. They've figured out that this is an opportunity for them to reach audiences across platforms. And the reason they work with GoDaddy is that we help them be where their customers are, whether it's on a marketplace or on social media or on their own website. And they've figured out that by using retail techniques with pricing and promotion, they're able to bring customers into their website and then help them by messaging post-purchase to retain and get additional bookings directly so that the lifetime value of their customers goes up.
We also talk a lot on this show about AI and how various businesses are leveraging it. A lot of times we're talking about mega cap companies and their AI strategy. When we're talking here about micro businesses, though, where is that AI opportunity? How right now in 2025 are these like ultra small businesses that you're working with actually using AI? Can they afford it? Can they afford to use it at scale? What are you seeing?
The beauty of generative AI is that it's a great leveler. It's trained by data that is available in the internet, and in the past, this type of information was only available to large corporations. And now small businesses are able to use generative AI to create content for social media, for their email campaigns, merchandising on their website, and they have become very savvy and adept at using these technologies really fast and get their message out to the masses. And in fact, what we've seen with our product GoDaddy Aero is that our customers who use GoDaddy Aero for their marketing and sales functions end up selling 43% more than those that do not. So there's a clear line between the usage of generative AI and the value that our customers are getting as sellers on the internet.
We understand about 3 million customers were using GoDaddy Aero in early 2025. Can you update us on that number?
We're really close to earnings, and as soon as we get there, we'll reveal more information. Obviously, because of the timing, I'm not able to share that. But what I can tell you is that GoDaddy Aero has been really successful in helping our customers adopt generative AI and also to automate their businesses in ways they had never done before.
What about average revenue per customer as a result of GoDaddy Aero? Are you realizing a price lift from Aero at this time?
I think, again, being so close to earnings, it'd be very hard for me to give you that information. But what I can tell you is that the value that our customers are getting and the verbatims that we get back from them make it very clear that we must continue to invest in generative AI and GoDaddy Aero and create more value for our customers.
What AI are you incorporating here with Aero? Are you using
good question.
ChatGPT? I mean, that's the one that comes to mind.
We have so many different models underneath the covers. What we do is we look for individual functions or workloads for customers and find the best capability out there across many different models. You mentioned ChatGPT, but Anthropic has other models, and we use models from Amazon. There's lots of different capabilities that we use depending on whether we're creating text, images, and other types of content, video. So it's not just a single model that we're using. We do invest quite extensively, and what we do that's our differentiator is our own data helps enrich what you would get out of traditional models that are available on the internet to give much better results to our customers.
I'm sure this is definitely an evolving kind of project, and I'm wondering what early adopter feedback you've gotten so far, and whether on Aero specifically, and whether that's influenced, how you're developing this product.
We do customer surveys, and obviously the first question we ask is how many of you use generative AI in your business? And when we first started asking this question a few years back, there were a handful of people who would say yes. And at this point, when we look at any forum, there'd be a handful of people that wouldn't raise their hand and say yes. And so the shift has been quite remarkable when we look at the adoption rates for small businesses in using AI. What they are doing right now is using many different products to solve their problems. And based on that being a fragmented experience, what we focused on is bringing everything together in GoDaddy Aero into a single umbrella, single product, so that our customers don't have to jump screens and change context when they're trying to solve their jobs to be done.
How much human input is needed for Aero?
It depends. I think some of the things, like when you buy a domain, obviously you have to describe what type of business you want to start and where you want to start it possibly, and it recommends a bunch of domains for you. But once you pick the domain, the website is built completely with automation, with generative AI, without the customer having to provide too much context, because just identifying the domain is sufficient for us to build an entire experience for the customer without them having to do any additional work. Now, we always allow customers to edit and change to make it more personalized for their needs, but ultimately, we want to make sure that we can solve our customers' problems as fast as possible, take away the blank slate problem so that they're not starting with something that inundates them with too much demand, and they can move faster by looking at a prototype that's built for them in seconds.
When you talk to your small business customers who are now using AI, do they mention potentially needing less employees because the AI is replacing some of that work? Or are they potentially maybe hiring more engineers or people who know how to use the AI?
When you look at our customer base, these are micro businesses that have up to 10 employees at most. So they're already very short-handed in solving the problems they need to today. The problem that we're solving for them is not by reducing their workforce, but by giving them tools and capabilities that makes their workforce even more efficient. Typically, when you look at someone who's solopreneur or they have 1 or 2 employees, the problem they're trying to solve is not how they reduce their workforce, but how do they make their workforce more efficient. So what happens is now AI becomes an ally for them to grow their business and scale out versus it being a cost reduction mechanism.
You got some serious competitors out there. GoDaddy definitely has the name recognition, but Wix when it comes to design, Shopify in e-commerce, I would say Squarespace perhaps is considered a competitor to GoDaddy. How do you differentiate yourself?
Look, I'm sure there are people out there beyond the names that you listed that are doing an incredible job. But what I do know is that we have over 20 million customers in our base, and they have been sharing information with us for over 2 decades. And so our data tells us what we need to do to set our customers up for success and help them completing their jobs to be done. Our focus is very much on our customers. We don't look at competitors really. I personally look very much at our customers and get their feedback on an ongoing basis. And I'm sure our competitors do the exact same thing. Ultimately, it is a huge opportunity in the world, and there's enough for everyone to grow.
Gaurav Pani, President of Independence at GoDaddy, joining us from Seattle. Gaurav, come back after earnings. You can talk more about the numbers. We appreciate your time this afternoon. Thanks so much for joining us. If you are watching us on Bloomberg Originals on YouTube, you'll probably see a picture of the White House imminently. President Trump is saying he would meet again with Israeli Prime Minister Benjamin Netanyahu today to further efforts to secure a ceasefire in Gaza following new momentum after a U.S. proposal to temporarily halt the fighting. We are expecting Prime Minister Netanyahu to arrive at the White House in the next few minutes. The meeting was set to happen at 6 o'clock, but it was pushed to 4:30.
Okay, well, we did have Netanyahu meeting with Trump Monday evening when the president hosted him for dinner at the White House. And of course, this Washington visit comes as Trump pushes for an end to the fighting between Hamas and Israel. And it's raising hopes that a deal is near to end the conflict that has raged since Hamas's attack on Israel in October 2023. It's now 4:34. So what did they say, 4:30? We're still waiting.
Still waiting. Hey, while we're waiting, we're getting other headlines. A big headline from Apple. Apple has named Sabiq Khan as COO, succeeding Jeff Williams. It's part of a long-planned succession. Jeff Williams will oversee design and health initiatives until the end of the year when he retires.
And he'll continue reporting to Apple CEO Tim Cook and overseeing Apple's world-class design team and the Apple Watch alongside the company's health initiatives.
Apple calls it the world-class design team, right?
Well, yeah.
That's what they're...
They don't call it the world-class AI team, that's for sure.
Oh, there we go. Check out Mark Gongloff's report, or Mark Gurman's reporting on this, excuse me. Coming up next, more coverage.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P both lower today. NASDAQ higher. The NASDAQ Composite Index ending with a gain of 6 points, up by less than 0.1%. That perhaps the key takeaway for today's equity market trading. Little changed all the way around. S&P down 4, down less than 0.1%. Ending the Tuesday session at 62.25 for the Dow, a drop of 165. That was a decline of 0.4%. Our Mag 7 index did move lower today, down 0.1%. Tesla, by the way, up 1.3%. 10-year yield 4.40% with a 2-year currently yielding 3.89%. Gold down $35 the ounce, just above 3,300 right now, 33.01 down 1%. West Texas Intermediate crude up 0.4%, 68.21 a barrel on WTI, and a surge today in copper. Copper up by 9.4%. As for market sentiment, Chris Brigatti is Chief Investment Officer of SWBC, and he was interviewed right here on Bloomberg Business Week Daily.
The market is kind of underreacting to negative news along the lines of the tariffs, for example, and almost overreacting to positive news and kind of shooting up. That's why we keep seeing these new highs. So the net effect is that the opportunity has made it very volatile. Volatility creates opportunity, but the markets generally don't like uncertainty. So we have all these kind of things coming together at the same time, and we're trying to dig through all of that and figure out where the opportunity lies.
Chris Brigatti, Chief Investment Officer of SWBC, interviewed on Bloomberg Business Week Daily. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale, according to Momentum Commerce. But the 4-year event, of course, this year does make year-over-year comparisons tricky. Shoppers may be holding off in hopes that discounts will deepen as the sale progresses. Amazon today lower by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. Some breaking news this afternoon. The U.S. Supreme Court let President Trump move ahead with plans to dramatically reduce the size of the federal government, lifting a court order that had blocked 19 federal departments and agencies from slashing their workforces. Granting a Trump request over one dissent, the justices on Tuesday cleared the administration to implement Trump's February 11th executive order, which opponents say could cause hundreds of thousands of federal workers to lose their job. The Supreme Court decision will apply while the litigation goes forward. Joining us now is Elizabeth Wasserman. She's Bloomberg News Supreme Court editor. Elizabeth, a decision such as this, or at least an allowance such as this that applies while litigation goes forward, how does this, what does this mean for the people whose jobs are at stake right now?
Well, it means more insecurity. While the court said that they weren't making a decision or taking a position on the underlying agency plans for how to carry out this workforce reduction, they did say that the Trump administration is likely to win their battle in the end. If you recall, Trump had signed an executive order back in February instructing agencies to carry out these, large-scale reductions, and then his Office of Management and Budget and the Personnel Management Office came up with some plans for that. And those plans were put on hold by a lower court in California, and this effectively lifts that court order that had blocked it at 19 different agencies, as you said.
What was the makeup here of which Supreme Court justices dissented and joined the majority, and did anything stand out in that decision-making to you?
Yes. Well, with these kind of emergency orders, we often don't get a head count of how each justice voted. But Ketanji Brown Jackson did dissent, and she wrote a dissent saying that that it actually it was harm producing, and that it should have gone through Congress. And she was she was alone in that argument, except Justice Sonia Sotomayor, who's the senior liberal justice, had concurred with that issue, but she joined the majority, which has been kind of rare in cases involving the Trump administration, in particular this flurry of actions that have come to the court on an emergency basis. So that was unusual. It has, in many of these orders, it's come down the 6-3 with the conservatives grouping together and the 3 liberal justices writing dissents.
Although the High Court order isn't designed to be the final word in the case, it marks a significant milestone in the president's campaign to transform the federal workforce. The affected agencies include HHS, the IRS, the Veterans Affairs Department, the Labor Department, the Energy Department, and the EPA. So does this mean that people who work at those places, you said uncertainty or their jobs are less secure? Yeah, go ahead.
Yeah, we're still waiting to hear from the White House, but it's most likely that this still has to go back to the lower court, and they have to review these plans and make the decisions on the merits. But again, the Supreme Court has indicated that the Trump administration is likely to win in the end.
What was the argument that the Trump administration made as to why they should be able to do this?
Well, that the president has the authority to redesign or reorganize the federal workforce, and that's the argument that it's his. Under the Constitution, it's part of his role as the head of the executive branch.
Well, what did the side arguing against this is the American Federation of Government Employees. Right. What was their argument?
It was a group of labor unions and like advocacy organizations who sued, and they told the justices that it was important to keep the plan on hold until the courts could rule on whether it was legal or not. The firings were supposed to be implemented in just a matter of months, and they argued that it really was Congress really needed to rubber stamp this and give the president the authority.
I'm wondering if this decision, in your opinion, sets any precedent for future federal actions or anything that Trump would want to do in the future when it comes to his executive power.
Yes, well, so far this year, we've seen a number of cases that have gone to the Supreme Court on an emergency basis in which they have backed his actions, on deporting immigrants who committed crimes or who allegedly committed crimes to third countries like El Salvador. Last week, they authorized some be sent to South Sudan. In other cases, he's still seeking to get rid of the Education Department. And all along, the court has tended to back Trump's view of presidential power, an expanded view of presidential power. And this is just another sign of that.
Are we waiting for any more cases to drop or any more decisions to drop or any? I can't keep this straight.
Even though the court's term is technically over, it runs from October to the end of June, they will still be dealing with emergency requests, which could come in at any time and which they can issue orders on at any time. The case I mentioned regarding dismantling of the Department of Education is still before the court, and we're still waiting on that, and we expect that issues involving tariffs could come before the court as well on an emergency basis. And again, this is just round one in these cases. In many cases, they're just talking about preliminary injunctions at this stage.
Elizabeth Wasserman, Bloomberg News Supreme Court editor, joining us from our Washington, D.C. bureau.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily, a reminder of how equity markets closed out this Tuesday, July 8th, 2025. They kind of did nothing unless you're small caps.
Yeah, they kind of did nothing. S&P 500 closing down 0.07%, but it's basically unchanged.
How was that Russell 2000? Off its best levels, right?
It was off its best levels, but it closed up about 0.6%. However, it's basically unchanged for the year. It's strong. I feel like every so often I interview someone and they're like, this is the time for small caps to rally. And then it doesn't hold for very long.
Oh, well.
Yeah.
Maybe tomorrow will bring a different day.
Yeah.
Well, I know it will bring a different day. Who knows what will happen with the markets?
I won't be here.
Oh, yeah, Carol's back tomorrow.
Carol's back.
But, I mean, you will be here working.
I mean, I hope I'm still here. But,
hey, maybe if you have a new story out, we might have you on the program. Maybe.
Yes, I am working on some curve steepening stuff. So.
Okay, we'll see. Let's take a look at some stocks on the move today. I'm Tim Stenovec with Emily Grafea. We're joined by Bloomberg News equities reporter Natalia Kanijevic. Bank of America. What's going on with Bank of America?
Yes, we had a big scoop today from our colleagues, Sridhar Natarajan, as well as my team member, Anthony Hughes. So they reported that Kuwait Investment Authority sold a 3.1 billion stake, according to people familiar with the matter. The stock was down by 3%. Ticker is BAC, as we know. We know that this wealth fund has been investing in Bank of America starting from 2008. But now it kind of follows this pattern because we know that another big investor, Warren Buffett, also reduced his position in Bank of America. We also see downgrades. We saw that HSBC is turning a little bit more cautious on some of the biggest U.S. banks, including Bank of America. What is interesting is that we know that up until recently, U.S. financials is one of the top performing sector on a 6-month basis. Last week, I just wrote a story about hedge funds buying U.S. financials at one of the fastest pace in the last decade. That was the second biggest volume of shares purchased. We saw that institutional investors are becoming more optimistic because of like some fundamental reasons and stuff like that. However, we see moves like that, and we will see how it plays out.
Yeah, not every institutional investor wants to still be in this stock. That's interesting that the wealth fund's backing goes back all the way to the financial crisis. They were really holding on to that position for quite some time.
Yep.
What else are you watching?
CoreWeave, the stock is down by a little bit more than 5%. The ticker is CRWV. It was downgraded to neutral at Stifel as well as Mizuho. So they see a 90-day downside catalyst because they see some downside momentum because we know that lockup period is expiring in August, and some analysts are saying that the options market is now pricing in the stock price at around $120. Now it's trading at $150, so it could be potentially really big downside for the stock. But overall, we know that CoreWeave is up by almost 280% since its IPO in March, guys. So, of course, we know that one of the biggest latest developments is that CoreWeave is buying this Core Scientific. It will give it more access to power, and this is one of the reasons why some analysts, at least near term, are turning a little bit more cautious on the stock.
Finally, a decliner.
A big decliner,
Sunrun.
Yes, Sunrun ticker is RUN. A lot of volatility in solar stocks. We know that the latest move comes as U.S. President Donald Trump called for new rules that would restrict access to tax incentives. Basically, he's saying that the U.S. Treasury Department should be a little bit more strict when it defines what the beginning of the construction means. When I chatted with a couple analysts, they said that basically Trump wants to make it a little bit more complicated for those solar companies just to prove that this is the beginning of the construction period. And of course, it depends whether they get or not those tax incentives. So this is one of the catalysts. We saw a couple downgrades. Analysts are turning a little bit more cautious. So a lot of volatility in the solar sector.
Yeah, there were a lot of questions in the tax bill about what would happen to credits and what would happen to government support of so-called renewable energy, there was the last-minute provision, the excise tax that was removed from it, which was kind of some good news for renewables. But still, no question that this administration is prioritizing fossil fuels.
Yeah, and it's been hard to be a trader in solar stocks. If you look at the TAN ETF, ticker TAN, it's an Invesco ETF of just solar stocks. It's down 50% over the last 3 years. It's a trade that's really tied to these political headlines and regulatory changes, as Natalia's mentioned.
That's Natalia Kenijevic. She's a Bloomberg News equities reporter, joining Emily Graffeo and me. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Taking a look at the top stories over the last 8 hours, the #1 most read story, Emily, about President Trump vowing to push forward with his aggressive tariff regime in the coming days, stressing he would not offer additional extensions on country-specific levies to now hit in early August, while indicating he could announce substantial new rates on imports of copper and pharmaceuticals. August 1st, that's the real deadline.
So some might say.
He says it.
He says it. Some of the people we interviewed today.
Yeah.
They're taking that deadline seriously. So